Good morning, good morning. Good morning, good morning. Straight into overnight action, it looks like, Tom Roberts.
Indeed. Good morning, Rich.
It's such a busy morning.
It is.
The gallery's decided no time for chit-chat.
Absolutely none at all.
Now, welcome back. How are you?
I'm very well, very well. How are you?
Yeah, good.
Good week?
It's been a great week so far. I must admit, yesterday got me out of jail. That was, I don't know about you guys at home, but what an afternoon for anybody who was, well, just long or had the right currency move on, or like myself, short a lot of vol. And had it gone the other way, well, it might have been a very different story, but beautiful day.
Headline this morning, Wall Street surges after inflation data, very strong bank earnings.
And those bank earnings really set you up for it because there was, bumper quarter. Should we have a look straight at the Times newspaper there? So, bumper quarter for US banks thanks to deal boost. There is Jamie looking very happy with himself. But yeah, the big four we've had already, the big four, and we had JP Morgan announced yesterday profits 3 months rising 50% to 14 billion. How about that?
I mean, JP Morgan, Wells Fargo, Goldman's, BlackRock, all posting good Q4 profits higher. I think it helps as well from a client point of view. Quite a few come out pre-market, so you can trade the all sessions.
Yeah.
And if you see that boost, you can see that the market's going to get a bit of a run on in the afternoon. Obviously, data helped as well at 1:30, the macro data. But I think the banks just gave everyone a bit of a lift yesterday.
They really
felt
did.
like it anyway.
Yeah. So we're going to dive into all that. But what else have we got coming up for you today? Well, Trader Tools 8:40 with Tom Wolstenholme. 8:58, we have the all sessions opening bell. Now, there's a last minute change because we've kicked out Jack Maguire because JJ this morning, our head of IG for North America, and of course Chicago Board of Trade legend, has said that he will come and do market measures with us.
Brilliant.
So the market measures will be very, very special today because we'll get a bit of history of where it comes from and why it holds such a dear place in their heart as well. Then at 9:40, IG Experiences with James Gordon. So if you tuned in last week, this actually has the best views that we've had so far on social media. It got the best response from the viewers, even people writing in and saying how much they enjoyed it. So James, for anybody who missed it, he took a few years out and he sat at home and he traded for himself. And he's basically going through that journey. what were the great things about it, what were the tricky things about it, and basically, yeah, how he managed his risk and how he managed his life around that full-time trading role as well.
Sounds good.
Second part coming up today at 9:40. Now we can go to overnight action. Right, so Tom Roberts, where were you yesterday when that number came out?
I was at the desk.
And was there huge anticipation for it?
I think the number, to be honest, was a bit of a surprise, actually. And definitely we saw good volumes yesterday afternoon around that time and on the back of it.
Yeah, was there a big pickup?
I think, yeah, I mean, there was definitely a pickup in volume. Clients were keen to see that number. I just don't think they were anticipating it. Quite what we thought, anyway.
Right.
So good move as we saw on the indexes.
Yeah, so there we go, really giving us that 3.2 was everything.
Yeah.
That was the important number. As soon as that flicked up on the screen, the futures were up about 40 points to start with. We can have a look at exactly what happened over the session. So yeah, there we were. Actually, it was a bit more than that. It was, yeah, 54 points. It moved in a straight line.
And if you pan out, I'm pretty sure the SP, it was a high for, is it a one month high?
No, 50. Oh, actually, as in, yeah, we were above 6,000.
Yeah.
Right, let's go. Yeah, so just trickling back. It's managing to get back there, isn't it? Where was the actual high? It was 6,087. You're right, 9th of December. So what's next? Right, that's the real question.
I think with the earnings coming out of the US, we'll see what sort of growth they've got just outside the banks as well, on some of the larger US names as well. I think if good numbers come out of there, Trump being inaugurated circa 5 days' time,
Yeah.
we might see a bit of a boost into the end of the month. I mean, that would be the trade at the moment is looking at the earnings, continuing with the macro environment. If the macro numbers are coming in line, the earnings are coming up strong, Trump giving a bit of a boost. You know, we'll wait and see. But I'd like to see a bit more momentum into the end of January, personally.
Yeah. Yeah, that's true. It can't just be that one-day market.
Correct.
But we've had PPI, we've had the CPI now. So let's look at how that rates outlook. So obviously, no change expected in January. Now March, we've actually got a 27% chance that we'll get a cut in March. Let's jump forward to June. June, there it is. It's now 43%
Yeah.
and the favoured chance that, in fact, if you put the 1 rate cut and 2 rate cuts together there, that's 60%. So, yeah, definitely taking
Stronger possibility.
stronger possibility.
I'm not going to commit, especially on live television, but a stronger possibility.
Oh, it's got the YouTube. You can say what you want.
In the next, 3 to 5 months, let's call it.
Now, for the UK, this was huge. For Rachel Reeves, can you imagine the relief? Because I'm pretty sure she doesn't get the number first. She might have got the UK one, but the relief in the Reeves household at number 11 last night would have been great, because you saw not just one jump as we got the number out at 7 a.m. So we were 89.11, but then that second jump up to 90.60. So 2% on the gilt. A 2% move in gilts is
Trading 90.93 now on the March gilt. It's a decent move, and as you say, I think not just relief, but there's definitely a bit of pressure off at that point. She's had a reasonably hard, strong week, depending how you look at it. But the gilts did help her out. Yeah, absolutely.
Right, so one final look at exactly where we are on rates. See how much this picture changed yesterday. So the 10-year on US Treasury is now 4.66, down from 4.75, and the 2-year at 4.28. And yeah, there we go, down to 5.24 from 5.34 on the 30-year. So at the long end, a nice move in.
I was going to say the far out, the 30-year, it's starting to come down a little bit. If we can nudge it down below 5.2, 5.15, I think that'll be interesting.
Yeah.
We'll wait and see. Just one point to note, Rich, I think gave the FTSE a bit of a boost yesterday. Slightly lagging, I felt, last week, this week.
Yeah.
I keep a close eye on the FTSE. It's something that I like to, trade and keep an eye on. Just gave it a little bit of a buzz. Been called up 36 points this morning, pre-market at the moment. Obviously, 20 minutes to go, but 83.35 last traded.
Which is that's a nice little increase, isn't it?
Yeah.
Let's have a look at exactly what Tom's talking about on the FTSE there. We had, a 7:30 a.m. move yesterday. That took us from 8,217. Then at 1:30 again, we've seen an 80-point rally since that number came out.
Correct, which is 1%. For you think about UK stocks where they are, pension funds, investment funds, 1% move in 12 hours is a good turnaround from where we were.
That's right, and the FTSE 250 even better. FTSE 250 up 2%.
Yep.
Because now it does leave us in that quandary over Bank of England rates, and sterling. So sterling actually jumped up to 123, but it's now more obvious that we can cut rates because gilts behaving themselves.
Correct. Or more obvious, stroke, there is a better chance, I think, that rates may be cut. Takes the pressure off Rachel Reeves, as you say, more in tune with the Bank of England. And, you've made it, FTSE mid 250 looking strong as well this morning, up 2.8%. We're one of the only places you can trade it as well. So it's good to have a look at that. Yeah, because there's not a centralized index on it. We in effect make that price by looking at all the 250 stocks on an individual basis and make that.
Right.
There isn't actually an index, excuse me, Rich, that you can trade as a centralized exchange.
Right, and there it is. There's your FTSE mid 250. That's how you find that on the platform. FTSE mid 250. That's a £2 mini contract that I use.
Correct.
Always get the sizes right.
Yes. It's a big number as well, 20,300 sort of number. So
yeah. Good. But that's sorry, sterling. So it's really tricky because you've got two pools now. You've got the benefit of the sort of pressure being taken off and a weaker dollar, right? So that's putting upward pressure on sterling. But then you've got the chance to cut rates and almost the necessity to cut rates.
Yeah. I'm just having a look this morning at cable. 122.20 down slightly. Had a bit of a push up yesterday. But yeah, it's that push-pull environment of the currency versus also what the wider environment might do. If we have a rate cut, when it will come, how aggressively as well.
So as you can see from that chart there, a huge spike as the dollar weakened. I said, thank you very much. You can have those, and sold a bit of cable.
Where was the high there?
That the actual high was 123.05. Yeah. I went a little bit early, 122.85, but it just felt right.
Yeah.
Now, if anybody was watching on Monday, I went across to Elliot Harris and I said, Elliot, what do we do if this is a big CPI? Then you're going to get a big jump in the market. So he helped me put together this beautiful structure that was a 58.80, 5,960 call ratio, and it closed at 5,950. My best options trade ever. And I did say on the show on Monday, thanks to Elliot, yeah, and it's his birthday tomorrow. So Elliot Harris, a very happy birthday for tomorrow. But yeah, I definitely owe you a packet of wine gums.
Excellent. I like that.
So yeah, but my best ever index derivatives trade, that one. So paid 7 ticks and sold it for 50.
Happy
In fact,
days.
up to 60 at one point.
I like that.
So that has given me the recovery that I needed to get through the Greg's P&L. Because that's looked a bit of a shocker.
Have you used your voucher
I
we spoke
haven't.
about last week?
I haven't, and I actually put it up for the viewers to win in the non-farm quiz we had, and I won it back again.
Did you?
I can't even get rid of it.
You need to donate it.
Well, I'm trying to because I'm on a diet. So,
You don't need to be on a diet, Rich. Come on.
my girlfriend's already said, "Oh, you quit that diet 4 days ago." But
All good intentions.
yeah,
Exactly.
and just because you break a New Year's resolution, it doesn't mean that it's gone, right? You can get back to it. Right, who have we got in the house this morning then? Do we have a funky gibbon? Yes, we do. We've got Gavin Ackers, morning to you. Andrew McKelvey, away from the numbers, looking at the FTSE 250, I guess that. Oh, no, it's the DAX. Yes, of course. Then Andrew McKelvey, no, we don't talk about that. But thank you for noticing. Good data out from AVCT this morning, and a good update from Pearson as well. Yes, Pearson, we've got to be looking at.
Yeah, I saw that. Pearson says performance in line with expectations. We've got Richemont out as well from Europe.
Now, cracking numbers from Richemont.
Yeah, third quarter sales beated estimates.
Yeah.
Up 10%.
Smashed up estimates. Yeah. So, yes, sales up 10%. Their highest ever quarterly sales.
Yep.
China, Asia Pacific, still a little bit of a drag. That was over there, it came in at down 7%, but last quarter was down 18% on like-for-likes there. Jewellery is big, up 14% in jewellery. That's driving the sales. But let me give you a bit of a pop quiz. Richemont, Louis Vuitton, and Gucci, i.e. Kerching, what's the 1 year moves? Or which one of them has performed best in the last year? Which one of them has performed worst?
Best performance, I would say, is Gucci.
Maybe in your wardrobe.
That was a bit of a guess.
Down 38% for Gucci. Kering.
Okay.
But Richemont, I have not looked at this stock in about a year, and it's up 28% in the last year. With all the luxury, stuff that's been going on, it's quite incredible performance.
That is very good indeed. What's the read across for that? Do we think we should look at?
Yeah, what is the
for the US?
Well, Tiffany's gone, isn't it?
It's gone.
Yeah.
We've got US earnings coming up. I suppose that's one I'll have a look at. What would be the read across there for luxury goods?
Yeah. H. Samuel, is that a luxury good? Or Ratner's. Do you remember the Ratner? Yes. Gerald Ratner. Oh, good stuff. Yeah, that's right, Monkey Man. Got to get the. It was that perfect day. The guys are just discussing the representing the old Tasty Live. So yesterday was the perfect scenario for Tasty clients across the board.
Yeah. Right,
because generally the guys sell vol. Right, you're selling Strangle, straddles. So you had a big drop in vol, and if you're short the put side, the market's come down. You kind of need a little bit of a bounce to get away from those lower put sides.
Yep.
And so you had a drop in vol, and you had an increase in market. It's the perfect scenario. That's my best day on Tasty as well. So far, so good. So yeah, as you can tell, that was an enjoyable day yesterday.
Hopefully another one soon.
Hope well. Yeah. Do we? What do we see here? Monday obviously closed, but have a look at vol there. There's your picture how it's been over the past 36 hours. So we were up at 19 at one point, Tom.
Yeah.
Now trading around the 17 level.
Good move up there.
Yeah, that really has. So that alleviated a lot of problems in the options world as well for those that are short options.
Yeah. Just having a quick look this morning, Luke Moore has kindly sent through a bit of a blast. So Renault Group as well in France, sales up 1.3% versus year on year. Rio Tinto, iron ore exports have slipped. Copper output has gone up as well. Taylor Wimpey as well for the house builders. They had a statement out this morning. UK home completions slightly underwhelming year on year, 9,972 versus 10,500 year on year. So keep an eye on the house builders as well for Taylor Wimpey. There's obviously a read across there for Persimmon and a few others as well.
Do you remember the old Taylor Woodrow recorded conversation?
Yes, I do. Yeah.
If anybody wants to hear what it was like on the old trading floors, I'll see if I can find this Taylor Woodrow call.
I'm not sure we can play that on.
Well, we definitely won't be playing it.
I knew the broker on the other side there.
Did you really?
Yeah. A guy called Ben Wadilove used to work at GNI. That's the Ben on
goodness.
the call. Yeah.
Is it really? And unfortunately, the other chap's passed away out here.
He has. Yeah, I believe he has.
Now here it is. If we can get that up, it's if you search broker call, and yeah, there's the before me and you fall out, mate.
Yes.
It was a conversation between a market maker and would it be a trader at another desk?
It was between a broker, I think at the old GNI, and a client, and then he was also talking to the market makers as well. So it's almost like a three-part conversation. And
it is just, he's looking for a price in 50 Taylor Woodrow. And he's saying, if you can't print me in 50 Taylor Woodrow, you and I are going to have problems. And the trader's saying, I'll work it for you. I'm not taking any risk from you. And he's so polite, isn't he? Yeah. But this other guy is just, he's ready to come down to the...
Correct.
Yeah, absolute classic. Yeah, strongly recommend listening to that for a feel of the good old days on the trading floor. And yeah, right, Rolls-Royce, that's a downgrade there. Sorry, no, take that back. My apologies. Rolls-Royce price target raised to £7 at Morgan Stanley. Is that a new high we're seeing?
I think it might be, actually. It's been a good stop, Rolls-Royce.
So go Rolls-Royce tip ranks and
10 on outperformance, is it?
So average price target. So yeah, £7. There we go. Ross Law, Morgan Stanley. That's today. So that gives it 24% upside, and then yeah, everything else. Goldman's £7.01. Always have to go that.
Always have to be top.
That's hilarious. So yeah, so Morgan Stanley joined Goldman saying that Rolls-Royce can keep on going. Right, what else have we missed then? Pearson, shall we have a look at that that update from then?
Pearson's, yeah, performance in line with expectations. They've had a statement out.
That's right, we covered this in Fast Markets the other day. So they're saying that 2024 operating profit would rise 10% and helped sales grow by 3%. So the forecast 595 to 600.
Yeah.
And right in line with expectations, as you say.
Analysts were expecting 600, yeah. So as I said, performance in line with expectations there. Got a headline here. Deliveroo sees earnings towards the top end of guidance as well.
Deliveroo does?
Deliveroo, yeah.
Wow.
So keep an eye on that.
I told you I needed to go on a diet.
Apple in talks with Barclays on credit card deals. That was from Reuters as well. That was coming through overnight and this morning.
Funky Gibbon, behave yourself. Rolls-Royce flying. Come on. We can raise the standard above that, can't we? I say. The worst dad jokes of all. Yeah, time to R6 Senna asking, well, I'll tell you, R6 Senna, we will drop IAG into our fast markets today. So Tom and I going head to head on fast markets at about 10 minutes past 8. Once we get the opening bell, we'll drop IAG into that one.
Yep.
Right, let's have a look at where we're sitting with FX and commodities going into that opening bell. Let's take a quick look at oil and gold. So gold, what did it do yesterday? Well, it headed up towards 2,700. Just a couple of ticks off that. Oil, even with the ceasefire in the Middle East, $79 now on WTI and 81 on Brent.
79.15, yep, traded on US. Bit of action on oil and gold yesterday from clients.
Right.
On the gold side, we definitely saw a bit more momentum with the gold. It's something that clients are quite keen on trading. They also trade a bit of a pairs trade as well with the gold and silver, just to see how that aligns. Usually silver outperforms gold on a percentage basis, but silver had a nice push up as well yesterday, trading around about 30.85 I think now.
Now, good old copper. Where are we seeing copper? Well, it's getting up towards that breakout zone. So what a performance on the year. It's already up 10% on the year, and really starting to look interesting as we approach $450. So yeah, certainly inflation trades back on despite that that number yesterday. And
the Rio numbers today on copper as well, they would have put out some guidance as well. I think was copper output was better or greater than expected, I think. I've just got to double check that.
Right, we are going to a quick break. We'll be back in 3 minutes. Go and put the kettle on. Monkey Man's making the teas.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education. So looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
And we're back for the opening bell. 2 minutes to go. So let's look at some of those early movers. We've got Antofagasta up 1% expected. Richemont looking up 5 to 7%. Nice. Well done to the Ruperts down there in South Africa. We've got, what else? Deliveroo up 3 to 5% as well. So the old Roo is doing well. We don't have a pre-market on Pearson.
Taylor Wimpey.
On
that. So we quick.
How's that one? Up 1 to 2.
Yep.
And Saint-Gobain looking down, but yeah, pretty good across the board. Kering looking up 3 to 4% as well. Louis Vuitton looking up 3%. Wow. Okay, that seems a bit punchy.
There's the read across for you, straight away.
Louis Vuitton. Thank you, J Mac. So these are the upgrades and downgrades sponsored by John McGuinness over in Dubai, who sends me them on the phone every morning. He's now in the chat as well. So everybody say thank you, John McGuinness, for sending through our upgrades and downgrades. Louis Vuitton raised to buy at Bank of America. That's why that one's moving. Perfect time, sir. Perfect time. So John used to work at hedge fund in London, and he was one of my clients.
Oh, very good. Pearson's been called up 1% by one of the London market makers at the moment. Taylor Wimpey as well at 1%.
Taylor, if you can't print me in 50,000 Taylor Wimpey.
25.
Oh, is it 25? God, it's even worse. All right, let's open this market then. Thursday, the 16th of January. We are off and running. L'Oreal straight out of, Pearson down 2% actually. And yeah, down 2.3% there on Pearson. But yeah, L'Oreal up 2 in the US. Hermes up 4. So those luxury names are going to be flying. What are you seeing there in the UK, sir?
Rich, we didn't speak about as well. Sorry, my mistake. I should have mentioned this. Whitbread had results out today.
Of course.
Posted Q3 numbers, said total UK accommodation sales for their Premier, obviously their own Premier Inn, sorry, sales were in line, which I think they also had a good Christmas period as well. Haven't been through the numbers, apologies on that, but worth keeping a quick eye on that. I think, if I'm right, they're up nearly 2.8% actually this morning.
Yeah, wonderful. So let's just get some headlines there if we can. On Whitbread, so yeah, exactly as Tom says, UK businesses grappling. Yeah, that's just, so no, doesn't look like many problems there for Whitbread with the national insurance and the taxes and the UK consumer all doing well so far, because Whitbread is up 2% on the back of numbers.
Deliveroo up, as we've seen. What are the fallers today? Have you
Should we click
the
on
other end of the scale?
Oh, Pearson dropping it away.
Yeah.
So yeah, now down, well, looking like 4%.
For Expo as well, down.
Then we've got Primark, Pete Ward's favourite retailer. That's down 2%. Marks and Spencer's down 60 basis points. And yeah, Flutter. But it's just mainly those strong day in Europe, really. That's the movers, isn't it? Air France up 2.
Yeah.
And
where's Richemont now?
I don't think we've got no trade on it yet.
Still uncrossing.
Yeah, so big moves in these luxuries because they're not open yet to get onto our board. So right, Deliveroo, there it is, up 8%. So anybody long Deliveroo, you're entitled to a free delivery this evening on the back of your profits, because that is a cracker.
Closed 129 yesterday. It's traded 140 just now. Actually, traded 139.5. As you say, 8.3%. Great moves there.
God, that's somewhere. Let's see if we can get Richemont. Richemont up 11%. So, of course, It is the Rupert family that run Richemont, so it does trade down in South Africa as well. So South African stock has been open for let's see if is it 7 a.m.? Yeah, so it has been open since 7 a.m. Stock trading up 12%. So that's why it's not yet open in Switzerland. Let's see if we've got anything on. No, Louis Vuitton still not open. So these are huge numbers in Kering, Louis Vuitton, and Richemont.
So I've got the Richemont order book up here. It looks like it's uncrossing around about 158.
And we can see this already in the CAC. So the CAC up 1.3%. And we could have got onto that at 7 a.m. Come on. That was why as soon as we saw Richemont open in South Africa, that is when you get the chance to buy the CAC. So that's one that we keep our eyes on in the future, people.
LVMH in Paris still actually hasn't uncrossed either, Rich, as well. So 690 on LVMH. Oh, it's just uncrossed.
691.
8.4% it's up. 690.2 trading.
Wow. So yeah, it's a real luxury day, but that was a missed opportunity. We could have been into those French futures at any point, and now going through the highs up 1.2%. So let's get an update on those luxury names. Louis Vuitton up 8, Kering up 8, Richemont up 11. Wow. Who would have thought? Just because it's jewellery sales.
Yeah.
Right? So just because people are buying jewellery doesn't mean they're back queuing outside Gucci.
No, but Gucci one to keep an eye on. I'm just looking at Richemont here. Still hasn't uncrossed 158. It's now been called up 13%. Keeps flying.
Wow. That's one
and
to
you can trade the
a
South
watch
African
of.
stock with us as well, actually. Both the Swiss and South African line, you can do both with us.
Yeah.
You're right, we probably missed a trick on the France 40.
Yeah, I'm frustrated at that one. That was free money.
FTSE up 50.
FTSE up
Move
50.
there.
Nice. Also, we got Watches of Switzerland benefiting from those sales as well. So Watches of Switzerland up 6. Burberry up 7% now. Burberry leading the charge now. But yeah, I must admit, okay, we've had an upgrade there as well. But watches and jewellery are very different from clothes.
Yes. High-end goods, good profit margins on jewellery, expensive capital costs, but if they've bought that on a futures basis, then they're taking their profits now. And as I said, there is much better margins in the jewellery side than there will be in the clothing side.
Yeah.
So,
and you can see, I mean, as we said, in the last year, Kering's down 38% and Richemont is up 28%. So clear divergence in fortune. So I think this is maybe just a little bit punchy on those two moves.
Kering trading 240 now. Let's have a quick look on the Paris line. Up 7.6.
How is that with regards to where it's been? Yeah, so I'm just the only thing I'm looking at is there a short-term short on this? But because it was here a month ago.
Yeah. It's going back to where it was, really.
Yeah. And I'm apprehensive in a market that's strong. It's right at that point where it was on the 31st of December. So.
Ticker for Richemont Switzerland, CFR, just having a look here, up 15%.
Richemont up 15%.
160 trading, closed at 139 last night. Hats off to anyone who had that stock.
So I got a good story for you here. So I was down in Cape Town and we bumped into Rupert's son, Anton. And he was friends with the guy that I was down in Cape Town hanging out with on the party scene. So he said, where are you off to? He said, we're going to Hermanus because my friend's family lived there. We're on our way to a safari. He goes, oh, how are you getting there? Oh, not sure, we're going to hire a car or something. He goes, oh, just jump in the back of the helicopter. So, it's, really?
The life you live.
This-
Rich, the life you live.
So we're in the Rupert's helicopter, up, boom, takes about, half an hour, land in Hermanus, and we're landing in this, what looks like a golf course. I said, are you sure we're allowed to land in a golf course? Oh, it's all right, it's just our back garden. So they've got 3 holes on this golf course in their back garden. And the mum came down in the Range Rover, picks us up from the helicopter, takes it up to the house, and she's listening to a horse race. And she shouts, go on, go on, go on. I said, oh, have you got a bet on? She goes, oh no, we own it. It was just how the other half live.
Surreal.
It was a surreal moment. Get up to the house, jump in the swimming pool, cool off, and then it was, yeah.
I was on the 22 bus this morning, no helicopters this morning. I love that story though. That's great. Well, they're probably acquiring more helicopters now at this rate, up 16%.
That is a cracker. So let's look at the longer term chart, the daily chart there. Highs, well, oof, we're real breakout here. Wow, Richemont levels not seen.
Yeah, what's the TA on the technicals? Where were we last at this level?
Is this all-time highs? Oh, it's all-time highs. Amazing. Yeah, it is. That's back to 2007. So Richemont all-time highs. You would not expect that from a luxury stock.
What do you do now?
There we go.
That's the ultimate question.
Yeah, that's. Who is buying them up 15%? 18%.
18%. 164 is just traded.
You can have some. You can have some of that. What's that? Oh, I don't know the sizes in.
Trading Swiss francs.
So
164 Swiss francs.
let's go.
Just come off actually a little bit as well.
50 is 8,000. Ah, I've missed it, haven't I? Up 17 still. Oh, it's got 2 Swissies while I've been working out how big to go. 3 Swissies.
Someone's front running you there, Rich.
Yeah, stop it, monkey
Yes,
man. Get your
yes.
finger off that trigger. Okay, I'll put in an offer and just see if I oh, it's back up. 163. No view. I just think who's buying a stock up 17%, and is there upside from there as well? So yeah, popping that offer in there. Right, back to normality, back to Deliveroo and the mining stocks, shall we? And good old Vodafone. Is Vodafone up 15% today? I think not.
Rio's a solid move up on their statement, just over 1%, trading 49.86. Don't think Voders are doing anything, are they?
Don't think so. IAG we're about to talk about in in fast markets. Rio's up 1. So yeah, I think I think that's pretty much our opening bell, isn't it?
I think it is.
Shall we go to a quick break? And then when we come back, we're going to go straight into fast markets. We've got some beautiful stocks. We are going to be talking about IAG, because Monkey Man's asking. We've got a viewer email, which, as I say, fast markets, that's what I really want to get to. I want to get you, the viewers, writing into us and asking us stocks. Have you got a position on already? Is there an options position in something? So Tesla is the one our viewer is interested in. Will Elon Musk have a fallout with Donald Trump at some stage, and how to position for that? So that's on Tesla. Then we've got questions on Visa and also Alibaba as well. So that's yeah. We'll be back shortly. 2-minute break, and we're back with fast markets.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
So welcome back to Fast Markets, the high-paced part of the show, where Tom and I are about to go through some of your ideas, some of your positioning, and your questions. We're starting off with, well, let's go straight to the chat and pick up on a question we had. IAG. Tom, it's gone far. What do you think if you were long here in the old Roberts ISA or pension?
In my portfolio of many different stocks, where are we looking at? 319 trading's had a great run up, Rich, as you said.
Yeah.
It's continued this calendar year as well from, the sort of 295 mark. It's a good move up there. I think if I had some of this, depending on my entry level from a risk management point of view, I would be looking at this and potentially, seeing what I could take off the table and what I could still keep in the trade.
Like a top slice.
Correct.
Right.
Always good to take a bit of profit off, but if you've still got momentum, is it worth still having a bit of skin in the game as well?
Yeah. Well, that's exactly right, because from August last year, it's doubled. So if you put in £5,000 in August last year, your position's now worth 10. Now, if your original investment was 5, then, do you want to take it back down to 5, or do you want to, take off a third? But yeah, just that position management. Always.
If you look at slightly shorter term from October, so Q4 calendar year here in the UK, it's gone from £2 to £3 pretty quickly. You're seeing 50% return there straight away.
Having said that, we have seen price targets of £5.
Yes.
So you potentially have another 30% to go. Yeah.
But according to when you bought it, depending on if you want to
Yeah.
take a bit of profit and keep some on the table, I think clients need to risk manage that sort of position. And hats off if clients have been buying that up since
Yeah.
Q4 of last year.
Great effort there. Right, we have a viewer email. Rich, at some point in 2025, Musk and Trump will inevitably fall out big time. What's the trade for that? I like it. I like the thinking, and
Yep.
there is quite a high probability. You put two egos like that in the room, and one of them's having a bad time, then they don't exactly see eye to eye on the environment for a starter.
Who's the puppet and who's the master? Who is controlling who?
Yeah.
What's the narrative? What can Musk get out of this?
Yeah.
He can't ever be president, so he's not running for that. But he can control what he can control, e.g. his companies, taxes, economy. He can have an influence on all that.
Yeah.
And that's not, he's the world's richest man. He will have huge influence.
And one of the points of friction is going to be he is going to come to Trump and he's going to say, right, you've told me to cut $2 trillion off the budget. There's my ideas. And they start to enact it, and it slows growth in the US economy.
Which makes Trump look politically not as strong as he possibly could do without such an influential voice on his right or left.
Yeah.
And Trump never wants to be made to look silly. And Musk is one of the people that I think could if he wanted to.
Yeah. True.
What's the trade there is the question.
Well,
Where do we see Tesla at that point? What would be the reaction on Tesla as well?
so you obviously can't short it because, as the guys say in the chat rightly, they've got results, and
Yeah.
this stock doesn't trade on how many cars it sells, right? It trades on the future potential for energy and, well, everything we know. So therefore, it's got to be an options trade. So let's go to the Tasty platform. There you can see, I don't have a position on it. Well, you can see how good the day was yesterday. This is what I'm talking about. When vol drops and when the market rallies, that was...
Look at the green.
I've got 15 positions and 13 of them
Yeah.
in the green. So that was a well-needed make-up for Greg's day.
Greg's on you.
Greg's are on me, on my voucher. Right, so let's look at... now, when would we start to see it?
What would you look at here, Rich? And what sort of levels? We're 425.5 it closed last night.
And we were about 250 before
November.
the relationship began. Now, the question is, if there's a breakup, are you then in a worse position as Elon Musk as you were before?
Depending on what you have already implemented. And this isn't going to be a short-term strategy. It's going to be a longer-term strategy for him.
Yeah.
But he will no doubt have an influence on where he thinks Tesla is going to be in a year's time with his relationship with Trump.
Yeah.
Do we see it above 500? Quite possibly.
Well, no, but what I'm saying is when they argue, right, then is Tesla completely screwed because Trump punishes him?
No, I don't think so. I
Okay,
don't
so
think...
it's not going to zero.
Because if he punishes Tesla, he's also punishing the economy at that point. And I don't think Trump wants to do that.
Is he punishing the economy? It's only a car company.
But it's one of the largest companies in the world. It's the most popular stock to trade.
Yeah.
A lot of people will be invested in this with
Okay.
the Trump-Musk narrative.
Right, let's look as far out as June, because we can always roll it. So June, the expected moves at $130, right? So you got a nice bit of vol there. The IV rank, remember, and this is talking about where stocks trade relative to their own volatility historically. So 85 is high. So we do have, so we don't want to be just buying downside. So what I would think is that we've got to assume that the stock goes back to where it was before the relationship started. So that's 250.
250.
So therefore, we want to benefit from some of that downside. Something like buying a 300 put and selling 2 of the 200s. So that's a ratio. Let me see what that gets us. Quantity. So yeah, that gives us an $8 trade, and your potential profit is 9,000. So you're short all the way from 300 down to 100, basically, because at 100 you're break even. Yeah, it's a nice way of getting in for 6 months and then forgetting about Tesla completely.
Yeah.
We've got probability of profits low, only 24%, but you're buying it to have just that lottery ticket. You can play around with those levels, see, if you only think it.
On the flip side to that question, what happens if the relationship gets even stronger and better? Where does that put Tesla in 6 to 12 months?
Yeah, how much is already priced in? That's the big question, isn't it?
Very true. Very true.
So if you're a bit more brave, you might do a 300 down to 250. That means your cost is only $1.50. So yeah, $1.50 in the mids, and you've got $50 of downside. Of course, your risk then would be if you go down through $200, then there would be, your long Tesla at $200.
You should ask JJ this question when he comes on, US specialist. See what he thought. See what his thinking is.
Do exactly that. Right, on to the next one. Alibaba.
Alibaba. As I said to you, Rich, one of my favourites actually. I like Alibaba. We saw a lot of growth in Alibaba. Talking about the US line here outside of Hong Kong. Clients buying up Alibaba over the last 2-3 years between 85 and 90. Peaked up back end of last year, back up at 120. All-time highs have been round about 128 of the last sort of 2-3 years. Come back down to 85.
We got the chart there, please, guys.
Full disclosure, I've got a bit of Alibaba in my longer term investments.
In the old Roberts ISA.
Correct. I think the relationship with Jack Ma and the Chinese government is something to keep an eye on. If ever Alibaba or parts of it gets sold off, what that would mean and who it's sold to.
Did the breakup never happen? The split? I don't think it did.
It never went fully to the full split.
Right.
There have been parts sold off. But there is a bit of a push-pull, as I said, between Jack Ma and the government. I think if that relationship ever got better, I could see it going back up to, if you look at a chart, and you look, there was a peak move early to middle of October, back up to 120. As you can see, it hadn't hit that level probably for about 1.5 to 2 years.
Yeah.
The key levels are sort of 140, 150. That's potentially. I don't know if we've got tip ranks on this at all.
I don't. Oh, there is.
Yep.
Nice.
Be worth having a look at the analyst ratings as well, and seeing what the PTs are on that.
Yeah, looks like around about the 130 level. Bank of America 112, but everybody above 100.
Yeah.
That's interesting.
Should be above 110, really. I just think it's an interesting stock to keep an eye on. It's one that thrives in earnings time as well, both on the upside and downside. And we have seen downside all the way back down to $70.
Yeah.
But it's steady at sort of 83 or where it is now, roughly. This is a longer term thing for me, but
I'm interested in that.
It's one that to keep an eye on as well.
Yeah.
One to keep an eye on.
Right. Good. That's piqued some interest. We've got another question on Visa. Now, Visa is one that is right up at its all-time highs. It's I guess they do just print money, don't they? I mean, it's
323 over Christmas time, I think, was one of the peaks. And
Yeah.
where were we last night? 317, 316.
316. So this would be one that I'd be interested in selling upside, and then maybe sit on a Strangle, actually, the 280 level as well. So let's have a look at what we get for 340, 280 on the Tasty platform. If we are looking at our 45 days.
The support
to
levels on the
expiry.
chart at 280 as well. You saw that in October where it bounced up and down from the 280 level and then continued upwards into the end of Q4.
Okay, so well, we've got a 43, but that's a weekly. So let's have a look at the 36. We get a buck there at 280 for selling the 280 puts, and we get a buck 30 for selling the 340 call. So that's just below one standard deviation on the puts. That is 1 SD. We'd receive $2.30. It's not amazing.
No.
Maybe we go out to.
What's the profit on that?
Yeah, let's get back in. So 77% probability of profit, 77%. But yeah, 230 bucks, and it's taken up 4,000 of capital. Let's chuck that one and have a quick look at March. 280 we receive 166, and the 340s receive 272. Okay, that starts to look a bit more interesting.
Yeah.
You're getting a 10% return on capital, and it's still 71% probability of profit. Get you in there, and $4.46. Okay, yeah, that one I'd be more inclined. Good, right. Any other quick fire stocks you wanna hit?
No, I was just looking at what the stocks are. Where are our favourites now? What's happened to Richemont? What's happened to?
Yeah, did I get done in Richmond? Let's
That was going to be one of my.
Right. Big day, the day after the CPI. It's are we going to see the US continue on its march? So Kering slightly off, still up 7.4, and we've got Burberry up 6.6, above the £10 level. Is that the first time Burbs has been above that £10 level? Yes, it is.
Yeah.
Yeah, that is the highest that Burberry's been in, must be about 6 months, is it? Yeah, there we go, back in July. Interesting. Is that a breakout that's going to hold? Ooh, I wouldn't bet on it.
It's trade 10.47 today. It's 10.25.
Yeah.
It's a good move for the day though, 6%. Richemont's come off a little bit, hasn't it?
This is sometimes when it's worth having some silly offers in, like above, because 10.47 on Burberry, on the back of jewellery sales elsewhere, it's like somebody got stopped out on a basket of luxury goods.
It's a pure read across on quite a lot of these things. Richemont 14.5%, so that's come off a little bit.
I didn't get
Kering,
of course not.
Still up 7.3%. Did you get the Richemont?
No, I don't think so. Where's
LVMH? I haven't
No.
seen that actually. LVMH off its highs as well. 691 high, trading 680.
Yeah, so okay, all these things kind of, got flipped up. The FTSE, however, 8,350. Vodafone 69.36. Greg's 21.88. Look at this. March back to stardom. There is Greg's. Oh, the gallery's starting to celebrate. They had a bid in there at £20.67, and they got them. So they're up.
Sausage rolls are on them. Excellent.
Should be, shouldn't it?
Yeah.
Unfortunately, it's just a demo account, so
What are have you got?
maybe they can have some fantasy sausage rolls.
Can you bring up the winners and losers for the FTSE at the moment? Who's leading the charge?
Yeah, this isn't all of the FTSE, but it...
So watch your Switzerland, as you said. Deliveroo's still holding as well.
Yeah, nice.
And Rolls-Royce, 575, as one of the clients said, flying high.
Flying high it is indeed. Any losers? We've got BAE Systems. Interesting. BAE up despite the peace deal, because you would hope that we that increases our chances of peace in Ukraine as well.
That might be on. Did you see Starmer has done a 100-year deal with Ukraine as a partnership?
Wow.
So the UK and Ukraine are having a 100-year partnership for all sorts of different things.
Defence related.
Correct. So that might be one of the things. That was on the headlines this morning.
Right. Okay, so that's why British Aerospace up. Now on the retailers, oh dear. Whitbread's lost all its gains. It's now down 90 basis points, and we're seeing JD Sports fall away again, actually, down 2.5%. So it rebounded. It was actually a 7% rebound from its lows a couple of days ago. So it had a really nice bounce, but unfortunately down 2.5%.
Just on your numbers there, it looks like the retailers are getting hit quite hard. Dunelm looked down as well, down 3.3. Maybe Christmas wasn't so good for them. JD, WH Smith, Marks and Sparks.
Yeah.
All negative this morning.
Tricky there. Next holding its head up above water, but was at that £99 level, now down at 92. Yeah, so no Greggs. Now I have to start thinking position management in Greggs, because 21.90 gets us back to. Now I did when I closed some out, I did take a 1,000 hit, so I'm definitely not up that £300. I'm still down 700. But have I pushed my luck enough in Greggs, and do I now think at 21.90 it's just take the lesson?
This is the psychology of trading. Will you be greedy? Will you try and get more? Where's enough for you? If you take it off the table from a risk management point of view, is there another opportunity there as well?
Very true. I think I take half off, because I did put some in my ISA as well. So got some in the ISA.
Double bubble.
Yeah. So right, I'm going to put a stop loss on the 400 shares here. So I paid 22.88 for them. They're now £1 lower, so I'm going to add a stop of 21.65. Yeah, 21.65 I'm going to put, and I'm also going to take profit at 22.50. So there we go. Set that. So that's it. Yeah, 21.65, and I'm out of not quite half the position, 400.
Where's your limit? 22.15?
And 22.15 on the upside, yeah. Still keeps me a little bit of skin in the game, but
Keeps it interesting.
Yeah, exactly. Tom, as always, bloody wonderful to have you on.
Really enjoyed it, Rich. Thank you for having me.
How's the rest of your day looking?
Busy today on desk, and got a couple of clients in this afternoon. Also just wanted to say, you know, if clients do want to come and see the office here in London, come and see the studio, come and see how we work, what we do, more than welcome to come and say hello.
Fantastic. That's a great offer. And yeah, we are also now finalising dates for the Tasty Workshop. So if you want to have a look at the platform, we keep on talking about it. If that's piquing your interest, then during February, I think the first one's going to be February the 6th. And then we'll have 2 more dates in February. But I'm going to build an email address, so you'll actually have an email address to register your interest. And then we'll get you signed up and get you into the office. We'll do a little tour. We'll get you into the studio. And yeah, that'll be coming up in February. So, Tom, enjoy the rest of the day.
Thanks very much, Rich.
Thank you very much. Keep your eyes on Greg's,
Will do.
and I'll keep my eye on Alibaba.
Good stuff.
We'll
Thanks
see
very
you.
much.
We'll see you in 5.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
I'm Ben Hemmington, and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait?
Download IG Invest today.
Hello, welcome to Trader Tools with the one that only Tom. It's Thursday as well. I'm pleased to note that the gallery is not as cold as it was on Monday, but we're now returning to sauna levels again.
Yeah, because the two blokes in before us are very sweaty blokes, I've noticed.
Oh,
That'll be it.
Is that
Like human radiators, yeah.
On that note, on the radiator note, how is Tom's mansion refab going?
The new house is leaking, actually.
Oh, no.
We've got roofers in the house as we speak. That's just what you want when you buy a house, isn't it?
You know, if you find out in the first 6 months, right? Is
that what it is?
Yeah.
Well, we're finding out in the first 1 month
Oh, dear.
that the roof needs replacing. So that's fun.
Okay.
Don't worry, it's okay. It's under control.
Yeah.
It's under control. My wife's at home dealing with, she's making the builder's tea and all that kind of stuff.
Nice.
Yeah.
Okay, because I was going to offer some structural support if you needed myself and my
And like
husband
holding it up.
to come over. No, my husband's a structural engineer.
Oh, is he?
By trade, anyway.
Well, we'll have him over when this all fails.
We like success here. We like success.
Yes.
So when it's all been a successful job done.
When the roof is no longer leaking, yes, you're right. That'd be good.
Speaking of which, we like successful tools, and this is
Yeah.
why we have this segment, especially for our trader friends who love it because they get to ask all these questions and surface tools that we already have, or indeed sometimes we might not have, and we are looking to build it. And in this case, very clever clogs, Monkey Man last week asked, do we have an ETF screener?
Yeah, which was a great shout. And we don't at the moment, but we are building one. So there is one being built and it's on the way. But there is another one while that's in progress. That'll go into our web trading platform when it's ready. The data comes from TipRanks, so we're just finalizing that with them. But there's another one I quite like that you can use in the meantime. If we look at my screen and we go to, so if you go to TradingView, which is a place that we've looked at a couple of times because you can trade IG products through TradingView. If you go to their products and you go to screeners and you go to ETFs, they have this screener here, which I quite like because it makes it reasonably easy. So it's the beginning of the year, you're thinking, what themes am I looking at this year? Let's say you were interested in emerging markets. Let's say you can tick on emerging markets and you can see the ETFs available for something like that. Let's say you were looking at their niche. Let's say you were looking at robotics and AI, for example. You can search by these different themes. You can turn that on and you can see all your AI, robotics, things like that. So any themes you wanted, you can have a look there. Big list of ETFs. Now, at the moment, you can't trade ETFs on TradingView with your IG account, but we're adding stocks at the moment on TradingView, so we could always add the ability to trade ETFs on TradingView if we wanted. But this is a good way of screening all your ETFs, finding the ETFs that you are interested in based on where they are in the world, what they are invested in, that kind of thing. If you're looking for high dividend ETFs, you could do it by dividend yield. If you wanted to see, for example, how they distribute.
Nice. I was going to also say, you know, I love the filters up there. I'm sure looking at the tab above, is there some way of also just easily clicking in to see what the constituents are in that ETF?
Well, let's have a look. So if you took the top one here, SPY, if we just bring up my screen, this is what you'd see when you open it up. You see a chart. You see its stats. Can I see its constituents? Nice.
I like that. And it also tells you a quick sort of snapshot as to geographically where, you know, the constituents are, what sort of weighting. Oh, there we are.
There we go.
Which sectors? There we are. Right at the bottom. There you go. Apple, Nvidia, Microsoft, Amazon, Meta. This looks very similar.
This is just the SPY ETF, so this is just your S&P 500.
Yeah, I was going to say similar to, I have I self-select my pension funds. The only difference between this and mine is that I've got Eli Lilly, and I've got well, it's got Tesla there as well. And I've got I don't have Broadcom. What have I got instead? I've got another US stock that doesn't spring to mind. I will. It'll come when I least expect it, and you'll hear me shout it out like some crazy person.
Yeah, well, I know you're obsessed with things like defense, aren't you? So that's something you could search for. You could search defense, and you could just bring up all the defense ETFs, for example.
Nice. Is there a way of also using this to? I guess the good thing now is that we have a way of selecting this until the IG ETF screener is here.
Yeah.
That is just a reminder, thanks to your comments. Monkey Man said, thank you very much, Tom.
No
They'll
problem.
check that out. Before we get the tool on the IG platform, and you'll be the first to know, it's a good way of just handily filtering out what you need. A lot of people, including myself, looking at changing up their pension for 2025. And it's a good way of doing this. What I also like doing is going in to look at the constituents. If I'm building a case for trading, I also want to see how they're positioned in other parts of the sector.
Yeah.
Right.
What themes? Have you got any themes? So, for example, I just set up a new portfolio for the year, and I looked at things like clean energy, defense, cybersecurity, AI, emerging markets. That was kind of setup I was going for. Have you got any key themes that you're looking at?
Of course I do.
Of course you do.
Of course I do.
Do you do it by themes? Do you kind of think of themes as you're planning?
Yeah. And I also have a name for this theme, and actually Luke Moore and the guys there have said that you need to make this into an ETF. Like, I even have a name for this ONG ETF.
Well, I'll be the judge of that. What's it comprised of?
So it's called the AAA ONG ETF.
Yeah.
And the AAA obviously has, good connotations too, right? So in the ratings world, AAA, great, good.
Yeah.
The A stands
Or
for
negative connotations, given what happened a number of years ago. But yeah, okay.
Yeah. And also given that I'm going to share this with you trader friends, but please don't laugh. But it cuts through the chase, easy to understand, right? I find that ETFs and funds could make their names a bit easier to understand. But I was
There's lots of acronyms, aren't there? UKITs and AC and that kind of thing.
Yeah, and AC, and it may make a lot of sense to all you people who are experts out there, but it's not going to make a huge amount of sense to Joe Blogs on the street going, what is AC? Why is there version A? What's K? What are the use? They don't make it simple, right? I was told by a fund manager that the reason for this, and I was like, why don't you do something like the Blue Sky ETF or something exciting, unicorn or something, so it's easy to remember. But they said, Ange, the way this works is that someone will search emerging markets.
But that's the thing.
You see, then everyone who deals with emerging markets has to have those two words in it. Otherwise, you get filtered out, right?
Yeah. It needs to be really obvious, because I know you said you like looking at the constituents, but in order to define the theme you're going for, it really is easier. So I guess you've gone against that rule of view and you've decided to call it something not helpful.
Yeah. So I need Tom's tools to think of a new name. So the AAA stands for, so the first A is AI, and specifically spending. So those that will benefit from AI spending, like the Microsofts and all that, right?
Okay.
The second A is ARMS, at which point the PCMs and everyone said, don't know how you're going to get this through. It's not going to get through compliance. But you get what I mean? With two wars still in place, right? Unless Trump can do something about it. PDQ, right? Caleb's the directors are now in there guessing what the last A is, right? So the second one is like defense, right? So your drones, these days we are looking at defense, not fighting them with big tanks and giant bombs. We're talking about drones and things like that.
Yeah.
And the last A.
Can I guess?
Yeah, go on.
It's not going to be automobile.
Come on, guess.
It's not going to be agriculture.
Can you guess the last three?
Is it going to be something rogue like?
It's pretty funny, but it's memorable. You see, it's memorable.
Is it just going to be like aggressive or something?
No, you walk away from this. No, I don't go with like those metaphors and everything. I need it to be just. I'm very simple, Tom.
Okay.
I'm a very simple person. I don't operate well without espressos. I haven't had one yet this morning, which is why you saw me this morning. I was like, oh. The last A is asses.
Beg your pardon?
As in?
As in?
Yeah.
Okay.
As in derrière. As
Right.
in your bottom.
Yeah.
Derrière.
We never would have got that.
Yeah. But, oh, did you? Caleb got it. Caleb got it. And that is because all that money that has been stored aside by the big Novo Nordisk, the Eli, all those, it's become like a huge war chest, right? They've made all this money with the GLP-1 type drugs. And this time round, I think 2025, 2026 is going to be when they're going to use that war chest. So to either buy more drugs within that space or fill in the gaps where they haven't put R&D in, right?
Okay.
So biotechs that are looking very, very attractive to them could, be bought this year, I think, because they need to put that money to work. And also, if you're shorting, trader friends, this is very handy because the GLP-1 space also gives you lots and lots of spaces to short. So GLP-1, as you know, Diageo, I know this, guys, because I changed up Moderna for Diageo, the drinks maker.
Yeah.
They did really well. I thought, yeah, they can, they can really like be the powerhouse of this space because they've come up with all these like light beers and, light products that will put them in good stead. But they got whacked. They got whacked, Tom, because their biggest shareholder pulled out and said GLP-1 is going to really hit these drinks makers hard because they found a lot of data showing that it suppresses your want for alcohol, your thirst for alcohol.
Okay.
So with that in mind, Andrew McKelvey is also saying alcohol. Thank you. There you go.
You lost me a bit with the GLP-1. I guess
The
is that a regulation?
No, GLP-1 is the active drug.
Is the drug, okay.
In the pills, in the obesity.
Right.
And it suppresses your thirst for alcohol, suppresses your thirst for fun. Anyway, there you go, the ETF.
You clearly haven't taken it then.
We've got 10 seconds to go. 30 new all session stocks. We're counting 5 minutes to all sessions open. Take us through the brand new all sessions that are coming to IG soon.
Sure, this is a list of them. So all sessions means that once we've turned these stocks here to all sessions, it will say all sessions after the name, and it means that you can trade them from 9 a.m. until 1 a.m. Monday to Thursday, and 9 a.m. to 10 p.m. I think on a Friday. So it means you'll have, these markets will be open more of the time. So you can react to news outside of regular trading hours.
Be ahead of the game.
You can be ahead of the game or after the game, in fact, because you could do it in post as well. So those on the 20th of January will be going all sessions. Some of those names you might like, for example, Dell is one of them. Most people in the office want to short Dell most of the time, every time they're asked to change their password. But these are the ones that will be going all sessions, 20th of January, more time to trade those.
Fantastic. Thank you very much. There you go. Some big names there. Starbucks, Chipotle. Up next, we've got Tasty's North America, IG North America CEO with us, JJ Kinhan, in the hot seat with Rich. So stay with us.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: list options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Welcome back, everybody. We're going into the all sessions opening bell. Let's look at these moves the day after the CPI. Strong day yesterday, and it looks like we're getting a repeat again today. Taiwan Semi had a fantastic day, fantastic set of numbers. So they're up 6.7%. So yeah, Taiwan Semi up 6.7. That's taken Nvidia higher as well, up 2.5%. Just struggling to get the size of the box there. There we go. AMD up 1.8%. We've got Apple up 1%, Netflix up 1%, and Plug Power up 5%. So some great moves there. Considering the size of the moves yesterday, to actually see that continuation today, just so showing some nice follow through. Taiwan Semi helping them higher. So best results that Taiwan Semi have had for a quarter so far. Now, who do we have here in the studio? JJ,
Good morning, sir. How are you?
Doing very well.
Good to see you, Richard.
Now, I must say,
I'm glad we coordinated the shirts, by the way.
That's right, without even trying there. JJ, I'm very jealous. Your job on Chicago board that's my dream job. Please, can you take through all the viewers at home what it actually felt like to trade on that floor?
It was really, it was a great opportunity. It was amazing. You know, I traded in a pit of 600 people. It was the largest pit in the world at the time. And so it was, you know, whatever you were competitive at, it was the greatest sense of competition you could have every day. If you were somebody who played football, it was the World Cup every single day.
Yes.
And it was, you know, so if you played cards, if you were a competitive dancer, if you were an athlete, whatever it was you were competitive at, you were playing against the best in the world every single day. I will say I was fortunate I met somebody who, you know, let me work there, and my family did not grow up in this kind of in the financial world at all. You know,
Right.
my father was a bus mechanic actually, and so and an immigrant to the U.S. So with that, got an opportunity, got a chance to take advantage of it. Started in the pit at a very young age. Only about 10% of the people who started actually lasted more than 6 months.
Wow.
Yeah, so the burnout rate, if you will, was very high.
Psychologically or performance-wise?
Performance-wise, I mean, you had to make money.
Yeah.
Well, psychologically, you know, it takes a toll on you too, because there's some pressure. What I will say is, coming from nothing, you had nothing to lose. So that made it a lot better. One of my older brothers is you know, the way I always looked at it, he's an anesthetist, put people to sleep for operations.
Right.
I'm like, okay, if I have a bad day, I lose money. If he has a bad day, somebody loses a life.
Oh, yeah.
But I will say this, what you do every single day is amazing, because many of you viewers have better information, certainly a better platform, and know more than we ever knew. The difference is this: discipline. One of the things people who made it as a professional trader are really good at is staying in their lane a little bit and being disciplined about the size of what they trade. When I first started trading on the floor, you know, you'd have people who were trading 200, 300, 400 contracts at a time. The two gentlemen who started me wouldn't let me trade more than 5 contracts at a time for the first 3 months.
Nice.
And it really taught you, A, humility,
Yeah.
and B, discipline. And it's if I could bring, you know, a couple of messages to everybody, the biggest message I would say to everybody is get risk you're comfortable with. Start smaller than you think you should, because you'll have enough. If you're new to something, we're going to talk about iron condors here. If you've never done an iron condor before, do it once. There'll be enough pain and suffering in one contract
Yeah.
as there is in 10. So learn really small. And the easiest thing to do is to have some success and become a bigger trader. The hardest thing to do is to lose money and then try and make it back by going bigger and bigger.
Yeah.
So one of the things that I've always considered myself pretty good at is knowing what my risk tolerance is. I don't compare myself to somebody like Tom. Tom has a bigger risk tolerance than I do. Good for him. That's fantastic. There are other people who would look at my stuff and say, I can't trade like that. You know, that's fine. Get to know who you are by doing 1s, 2s, and working your way up to where you're uncomfortable. And then get comfortable there. And if you never move more than 2, 3 contracts per trade, good for you. At least you know it. So when people say to me, I'm so stressed out from my trades, I'm like, well, that's on you, because you weren't disciplined in the size you traded.
So one of the great lessons I learned from a trading psychologist they brought into Credit Suisse First Boston was, if you're praying that a position starts to go right, or if you're waking up in the middle of the night and it's the first thing you think about, it's too big.
Yeah, absolutely. Hope is not a strategy.
Yeah.
Hope and prayer are not recognized strategies in trading.
And with that, takes us perfectly into today's market measures. So, JJ, market measures means a lot to you. It's something you've been involved with for a great number of years. Just take us through a bit of the history of the idea.
Sure. So, as you don't know, after the floor, I worked at Thinkorswim. Tom Zosnoff, Scott Sheridan founded Thinkorswim. So I went there and ran the education for all of Thinkorswim. Then TD Ameritrade bought us. I ran all the education for TD Ameritrade. So what you do every day, I'm jealous of, because educating people is really something I truly enjoy, and it's so fun for me to get to come on with you, because I just don't get these opportunities that much anymore. So when Tasty Trade first started, it actually started as a financial network similar to what you do every single day, Rich. And so they would send their clients to TD Ameritrade at the time. Well, because I was TD Ameritrade education and chief market strategist and ran platforms and did a lot of things there, I would go to the Tasty Trade studios and we started Market Measures, and I was the first host with Tom and Tony.
No way. So you were the OG on Market Measures.
I was the OG on Market Measures with the guys, and it was really, really a lot of fun. A gentleman named James Blakeway, who's now on the brokerage side of our business, and he was the original producer of this show.
Right.
Yeah, so it really is a show that's always meant a lot to me because it's great at teaching a lesson every single week.
That's it. And that's, especially for those of you at home that are just starting your journey in the options world, this is the real path to getting that education, to feel more comfortable with the platform and with the whole theory. So with that, shall we jump in?
Let's do it, kid.
Right. So today we are going to look at strangles and iron condors, as JJ alluded to, finding the right size balance.
All right. So, as we have on the slide here, first thing I want to say, even before we get into this, people may say, oh my God, iron condor strangles, what are you talking about? So these are the second level of trading. Okay, these are not the basics. It's not covered call, etc. It's the next level of trading. They're fine. Biggest difference between a strangle and an iron condor is this. Iron condor, you're going to define your risk. Strangle, you aren't. If you've never done either of these before, you may want to start with an iron condor so you know how much you can lose. I just got done talking about risk. A iron condor, you can define your risk. A strangle, you cannot define your risk. Okay, so let's start right there. And again, newer people, iron condors might be the way to go.
And so we can take a real quick look actually on the platform, because I've got a Disney iron condor on at the moment. So let's flip to positions, and we see coming up towards, of course, I actually took the higher top off, but you would be short.
Well, now do you have a strangle on?
No, it's
they're both puts. You have a short put spread. I'm sorry.
So we've got half of an iron condor on with short the 110 put, and the thing that JJ mentioned that makes a difference between the iron condor and just the strangle is that I'm long the put at the 100 level. So as he says, it defines the risk. It gives me an out.
Exactly. So if you look at this trade, all Rich is really doing here is selling the 110 put. That's what this trade is about. Is he's selling the 110 put? Disney trading 108.15 right now. His belief that Disney will get back above 110, and it's only a one-day trade at this point. So by the end of the day tomorrow. With all that said, why does he buy this 100 put? The reason he bought the 100 put is to simply say, I want to know what's the worst thing that can happen to me. And the worst thing that can happen to him right here is the stock blows down to 100. Now, puts are a little bit different in this sense. No, they're both the same actually. So he's short a put. What does that mean? That means that if we're under 110, and he does not close this position, but I know he will because he's a disciplined trader.
Absolutely.
But if we were to close under 110 and he didn't close it, someone could put the stock to him. That's really all put is. I'm going to put this to you. You have this piece of crap. I want nothing to do with it. And so when you're short puts, people can put stock to you. So, and again, he's just going to do this, and then he'll do a call. So let's switch that. So as market volatility and market correction increase, you want to minimize your risk, improve your odds of success. So one of the things you can do to improve your odds of success is to sell a put or call further away from the money. A 15 or 10 delta option. What is as compared to 20 or 30? What does a 15 delta option tell us? Again, an option delta tells you how much the option should move with a $1 move in the underlying. So if Rich sold the 15 delta option, this 15 delta put in Disney, and Disney went down by $1, that put will go up 15 cents. If he does the 30 delta option, in theory, that option should go up by 30 cents. So that's really all delta does. Tells you how much the value of the option should move, but what it also gives you is a thumbnail probability, even though we have this already built into the platform, it gives you a thumbnail probability of that option being in the money on expiration day. So easy enough. Now, go ahead, sorry.
Yeah, and then we can look at the 2 standard deviation strangles, and that success rate of 95% makes it really attractive for those traders that are maybe starting off, that are focused on the success rate.
And well, so I know something you and I kind of discussed yesterday by email was, so that's true. The 95 delta option, you have a pretty high success rate. One bad thing about it, A, you don't get much money up front if you're going to do that. B, they don't go against you very often. But when they do, they tend to rip your face off. And I know you and I were talking about an experience you recently had with it.
That's right. So Broadcom, when Broadcom popped up 25% on numbers, it went up to 215. And I thought, right, I like that. I'm going to sell the 190 puts because I don't think it's going back down there. If it does go back down there, I'm quite happy to own them. But I'm going to sell the $250 calls. Well, didn't the thing over the next 2 days go right up to touch me on the strike within 2 days?
Right.
And it was horrific.
And again, that is there's no, people are always looking for what's the edge, blah, blah, blah. There's always a sacrifice you have to make with options. You can have high probabilities for that you don't get paid a lot of money. You can get paid a lot of money for that you don't have as high a probability. So you're always going to have to, when I'm talking about risk earlier, this is one of the things you have to find. Where is that sort of sweet spot for the trade you're trying to make?
Yeah. Right. So regarding success rate, both the 1 and 2 standard deviation strategies exceeded expectations, but the success rate for those 2 standard deviation strangles is even better. 97%, JJ.
That is a pretty high. It's hard to argue with it, but again, let's be very honest about the amount of money you're probably going to receive on that. It's going to be picking up pennies in front of on the railroad tracks. That's really the easiest way to say that. All right. And again, as Rich just said, as you would expect, it's 2 standard deviations. 2 standard deviations in theory should never happen very often. So it's lining up with what taking probably some of you back to your secondary school math, maybe in a painful way.
Yeah.
But again, lower P&Ls, and you can see the thing that just jumps out at me on this one, Rich, is look at the premium difference and the P&L difference.
Yeah.
But a 97% win rate for 14, bucks. Winner, chicken dinner.
Yeah. And when it might come in, it might be more interesting is if we have a real jump in vol, I would imagine.
Absolutely. And so again, why would a jump in vol matter on this? So again, one way to think about volatility. When volatility jumps, all it's really telling you is that there's a higher probability that an option further away from the money could be in the money. So the jump in volatility allows you to get further away from where we're at currently. So if volatility melts, the stock doesn't even have to move. And if a stock doesn't move much for a while, volatility usually does melt. That's going to be a nice thing for you.
And we missed, unfortunately, because we didn't come back to camera, but JJ gave an exact example of why they're called the wings.
I started to.
We're soaring.
I went like this as I was soaring on. So again, one thing about these, though, that I think you have to keep in mind with iron condors and with strangles, you're never going to be happy again in your life. Why do I say that? If you think about, as Rich just said, we're selling the wings. So you're selling a call out here, a put out here. Well, every time we move up, oh my God, we're going closer to my call. Every time we move down, oh my God, we're going to our put. But I have a high success rate. So that's kind of nice. But what I'm telling you is once you start trading these, you're never going to have an enjoyable day again. Except Saturdays, because the market's not open. Sunday nights we start with the futures again.
Taking the theta.
Right, exactly. But I say it jokingly, but this is a trade where you have to get used to the fact that no matter which way we move, you are not going to be happy. Yeah. Why do you think I'm 22? Now, why do you think I look like that? So,
good stuff. Right, the long-term portfolio performance be for both strategies if simulated with an equally sized account, 25% of asset value allocated to each, and managed at 21 days to expiry. So, from that portfolio perspective, that's when your 2 standard deviation strangles underperform by 27%. But it helps the volatility control. So as you said, for new traders who just want to get to know the platform, not too much P&L volatility. It's not a bad place to start.
Not at all. What I like is you have Spider as the symbol you're trading these on. One other thing I would say to newer traders. Now, Rich is doing Apple on the one he had. I'm sorry, Disney on the one he had. I apologize. This is more, in my opinion, these are a little more difficult in single names. You got to get used to that. I would start with a broad-based ETF or index, Spider, QQQ, something like that.
Yeah.
The reason being this, if you trade Spider, it's based on 500 stocks. One stock with good or bad news should not blow everything up. In the case of Disney, we're just taking a little bit bigger bet, and that is that Disney could come out with some news one way or the other. There's nothing to balance it. So again, just think about as you work into this. This is a process and about having success and trading small. So Rich has been doing an unbelievable job. And I mean, I think for those of you who watch every day, I think it's just fun to watch how far you've come as a trader and really doing these in smarter ways. Yeah. So again, people, you have to get used to this. And one thing you talked about when I first started trading in the pit, now I did it every day, all day, and I'll never forget. My first day I'm going down to the pit, you're so nervous, I'm pretty young, you got to get used to yourself yelling and things like that. The guys I worked for said, oh, by the way, great luck, best of luck. And if you break even in 6 months after expenses, welcome aboard. If you don't, it's been great knowing you.
Okay, simple as that.
The reason I tell that is because don't expect immediate success. Learn how, I always tell people, learn how to stop losing money, and making money takes care of itself.
So we were exactly the same at the hedge fund. If you lost money in the first 3 months, thanks very much for trying. And if you didn't make money after 6 months, then it was the same. Yeah. But as long as you passed that 6 month, you were in for years.
Yeah, exactly. Because you've learned how to stop losing money. And that's where most people struggle.
Yeah. Now, what about iron condors, JJ? So they are highly popular primarily for their ability to customize the amount of risk through adjusting those wingspans.
And absolutely, and I love what you've done here. We have a 20 delta strangle, selling the 20 delta call, selling the 20 delta put. No matter which way we move, you'll be unhappy. But what Rich has here that I think is really important, and again, using the Spider, is you have a strike every dollar.
Yeah.
You can adjust what you would, $1, you're not going to get much money, but you're not taking as much risk. $3, and then you can go as wide as $10. Again, $10 for most people, I think starting with $1 or $2 wide is probably more than enough, and get used to how they trade. But I love the fact that you are showing the different levels of return.
And we do have to thank Sahil for that. Great work from Sahil every single day. He drops us a
machine.
He is.
He'll be a great trader because consistency is a great trait.
There you go, Sahil. I know he watches, so he'll be happy to hear that. Right, now theoretically, the tight wings do have some advantages. They're cheap to trade. They've got that small maximum loss per unit, and they can potentially yield the high return on investment. Look at the $5 width there in the middle. You're getting $1.49, but also that 42% return on capital.
Yeah, there's not much. I mean, the chart kind of speaks for itself right here. The only thing that people who are new may look at this and say, why would I, on a $5 risk $3.51 to get $1.49?
Yeah.
You're like, it doesn't really make sense. Why? Because you have a really high probability of keeping that $1.49. And that's what this is all about. Or what are my probabilities of keeping the money?
Yeah. And I saw, Liz and Jenny especially were chatting yesterday. They were celebrating that CPI number on they're actually at the board. And I think everybody felt that yesterday because you had seen the market under pressure, and then so vol had been going up as well. But not only did we have the alleviation away from your put levels, but also had that drop in vol. So it was quite a nice P&L day for a lot of people on the platform, I think.
Well, I think volatility got smashed. Now, if you were short a lot of upside yesterday, you probably were not in a good mood.
Yeah.
And those of you who are just doing covered calls, or cash covered puts, you were probably doing a little happy dance last night.
There was a bit of that going on, I'm sure. So we, there's Now, this one, the small iron condors have a much higher volatility in P&L, and that amplifies the gap between expected and actual return. And it's not often we see this, that the realized is so much below the expected.
Well, and again, why is this? Because you're selling both sides. You have to stay in the middle. And what happens to so many people on iron condors is they just, I'll say mistake. All right, when you do an iron condor, think about this. You know what you can make, you know what you can lose, you know how long it's going to take.
Yeah.
And we can do another lesson about figuring out the probabilities on this, real risk divided by total risk. So you could know everything about it. And if just using a delta, you have a probability. What do people often do? Think about your Broadcom situation.
Mm-hmm.
What ends up happening a lot is the stock will rally. Maybe somebody has a week to go on the iron condor, and it's approaching their short call.
Yeah.
They'll buy that call in. And since we all know that this market has one job, and that's to screw each and every one of us personally every single day,
possible.
the they that we know is on the other side of the screen, what's the next thing the market's going to do as soon as you buy that call in? It's going to go right back toward your put. Actually, if you're going to close a side of this, I always like to close the side away from where I'm at. Yeah. And I'll let you know, you've done that a bit with your put spread, right? And when I looked at your put spread, other people may have looked at that and said, hold on, he took off the call side. Why? He's still short a put spread and it's just in the money.
Yeah.
To me, that's good trading because you're letting the put spread play itself out over that you have time. Why would you buy? As we went to it, it doesn't make sense to me to buy it because it's probably at its highest level.
Yeah.
So you got to let that play out. You're better off taking off risk on the other end. And this is a mistake I've seen people make. First of all, any mistake I say people have made, we could substitute me for the word people because I've made them hundreds of times.
Yeah.
And so, but it's something to keep in mind when you're taking these off. Again, movement is not your friend in this trade.
Right, so finally, when it comes to the percentage return, wide iron condors can give us more bang for the buck in the same amount of time. And yet again, another nice chart up there from Sahil showing the iron condors against those strangles.
Yeah, and again, why do the strangles have the better return? Because you're not defining your risk. You're not buying that wing. You're not. So again, those of you who are newer, please start with the iron condor strangles. Again, we said this is a next level trade. Strangle's a next level trade of an iron condor. It's just an iron condor without defining your risk. But, you know, it's one that can be, it's going to take more margin for sure. With the other issue on this will be with, if you have a smaller account, with the iron condor, you don't have to put up as much money. For a strangle, you're going to have to put up significantly more money because you are taking, on the downside, your risk as the stock goes to zero, so you could say that's defined. But on the upside, in theory, a stock can go up forever except the ones that you buy. So, but you know, that's how the clearing firm has to look at it.
Yeah.
So
yeah, there's not many. Often it's one of my stocks that gets taken over.
I was going to say
there's always the M&A.
Except for those stocks that I buy, theoretically they could all go up forever.
Right. Take us away then, JJ. What do we learn from this?
So we learn that smaller delta strangles often have high success rates and volatility, but could underperform in P&L and return on capital. That said, there still might be a better place for people to start.
Yeah.
Narrowing iron condos are very cost effective for beginners, kind of repeating that, but have lower success rates and volatile P&L with limited profit potential. Iron condors are always going to have limited profit potential, but what we need to add on there is they also have limited risk to them. So again, in defining risks, going too small is much worse in the long term compared to going too small with strangles. But again, you're going to work your way into being used to this risk. So I would say that's not a giant risk forever.
Okay.
And smaller strangles provide certain benefits. They may not always yield the best returns. So I balance. The last sentence here is how every single thing we ever talk about should be, right, Rich? Highlight the importance of balancing risk and reward.
That's it. Like you've never been off the camera.
It's always fun. I really, really enjoyed it.
How many years ago would that first market measures have been?
Oh, that would have been in 2010. Jeez. No, probably 2015. But I've been fortunate enough, CNBC and Bloomberg I've been doing probably since 1999. If you want a quick funny story.
Yeah.
So I'm standing, and where I stood in the pit, I stood in the back row. And the woman who ran PR, Chicago Board Options Exchange, a woman named Lynn Howard, really wonderful lady, comes up to me one day. They used to film it right literally behind me every single day so they could get the pit and the shot. So she comes up to me one day and she goes, JJ, you got to help me out. I said, sure, Lynn, what's up? She's like, I need somebody to go on TV in a minute. I'm like, Lynn, I've never been on TV before. She goes, you'll be fine. You're full of crap. Go
Get on there.
Yeah.
Fantastic.
So,
Good stuff. Right. Well, I'm getting the call. You've got a meeting in 2 minutes' time, JJ.
Yeah,
so
this was
running
fun. Thanks for having me.
Pillar to post. Fantastic to have you on. We're back in 5 minutes.
Raise the bar. If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey buddies, welcome back. We are live from the trade desk with Jack Maguire. Hey Jack, how are you?
I'm good, Ange. Good morning. How are you?
So wonderful to see you, because we were both watching that CPI action together live. What was the vibe here? Because I was on the go.
It was very, very busy. I think you could see the build-up throughout the morning. Everyone expected it was going to be a big one, and it didn't really disappoint. Not really a massive difference between what we expected in terms of the figure as well, but the reaction was something else. And it continued for the rest of the day. It
did, didn't it? So I'm just going to throw up just a reminder. I'm sure you've done this in the morning already, but just a reminder of that pop that we saw. And it was like completely, you're right, the momentum did continue on. Also showing you the Tech 100, a similar reaction there. And I'm going to throw up the 30-minute chart because that's the fastest way of showing you that pop. And as you can see, it didn't come back down. It just carried on. When I was messaging you at around 4:30, because that's when I normally do my housekeeping, they were still roaring. I mean, Tesla was up 5%. The crypto-related stocks were they were on a tear. What are you seeing now in terms of volatility now that we've come off that hay?
Well, yeah, when we see, or when we have a figure like this, a massive figure, I think yesterday was probably the biggest CPI we've had in months, if not a year. You can see it building up through the morning, so you get that implied volatility, and you can look at straddles and see what the expected move might be. We saw it come out straight away after the number, but not to the same extent as a normal figure, just because of the sheer realized volatility that we saw in the market. It started to ease as we went through the night, but it still remained pretty high. I think today we've seen it finally come down, normalize a little bit. But yeah, it stuck around for a little while longer with how much of a move we were seeing.
Just showing up the volatility as well, because you're right, it has come back down. And what I always say to a lot of our trader friends here is, you see the bounce, but beware the following session, because we could have a snapback. Just taking a look at some of my watch lists here. Crypto had a big bounce, obviously, in the previous session after the CPI number, but as you can see, some of them, all sessions have come back down now. Also, those that did have a bump up, I think, from that CPI figure, because they were so beaten down already. Also, they were the quantum stocks here, where I've also got a watch list. So those are likely, if you are trading that in the main session today, keep an eye out, because they are likely to come back down. So all that being said, we're now kind of in that process where we're just shaking out, counting down to some of the other big earnings coming out on Thursday. Bank of America, Goldman Sachs, Morgan Stanley, TSMC as well. What have you got out there? What's on your radar?
My desk primarily on macro things, so we'll be looking at a few figures. We've had, I think we had UK growth figures this morning. We've come back into the positive, so we'll be looking at how the FTSE, the pound's reacting. Obviously, the pound's been quite an interesting market over the last week or so. And then we've got retail sales tomorrow. So we'll just be closing out the week, seeing how we react. But even after a figure like CPI, like you say, we're probably going to see some sort of correction. In fact, this morning on a lot of our zero DTE, so the daily option space, there's a significant amount of put buyers out there. And you can tell because the market bias and sort of it's shifted back down to the downside here. So we've seen it quite expensive as you get into those out of money puts. We'll just be interested to see how we get out to the end of this week. It's also an expiry tomorrow for the monthly options. So we generally get quite a lot of business through the evening tonight. I think it's probably going to be a busy 2 days for our desk. Yeah, we'll see how it goes.
And also whacking up the cable chart for you, the weak sterling, stronger US dollar, still very much in play there after that number that, to me, in my humble opinion, just kind of reaffirmed the whole flatlining UK economy thesis.
Yeah, I think so. I think we're probably not going to see a huge change from how this market's been reacting recently. You can see there that the move happens, and it's been quite similar in a lot of FX pairs where it pretty much reversed itself out maybe a couple of hours later. You didn't see that same move on indices, so I think there's probably stronger narratives when it comes to the pound at the moment.
With easing and sluggish economic growth, there's been a lot of talk about, this 25 basis point rate cut from the Bank of England in February, increasingly likely. Is that kind of your reading, the mood music you're getting as well from clients?
Yeah, definitely. We saw, I think it was on the inflation figures at the start of this week. I remember seeing there was a shift up of about 15% likelihood. I think we're now at around 80% likelihood. It's pretty much confirmed. I feel like with these type of things, there's not many surprises when it comes to central banks anymore. If it's signaled, it's very much likely to happen, and we can see it implied in quite a lot of the price in here. Yeah, it'll be interesting to see if we have any shocks, to be honest. I think the market is dictating quite a lot of what's happening at the moment with interest rates.
And also we talk about this quite a bit here also with JJ, the head of IG North America. He was saying if there was one thing he would be watching very closely, it's WTI. This is one that I keep a firm eye on as well, and it's marching to that $80 a barrel. Our Saxena, one of our trader friends here, who watches us every day, asking earlier today, our airlines, IAG in general, is it time to come out now, given, oil prices are on the way up again? What I would say is try and leg it out and leg it out in stages. So if you've had a good run, maybe take a quarter of a half of your exposure off. Indeed, you're right to be cautious because, just off the top of my memory, it's when we have those spikes in oil prices when they, give airline stocks a bit of a jolt. So like when Russia invaded Ukraine, the Iraq crisis, any sort of crisis like that pushes oil to suddenly spike up is a concern. If oil comes back down, RSAX, then if it edges back down, then we have the inauguration and Trump does what he says and soothes the situation over in Ukraine and Russia, then perhaps we will see that trajectory into the summer, the upward trajectory for airlines. But if we see this continued creep towards 80, well, we've got other problems, right, Jack?
Yeah, exactly. And you'd hope with Trump coming in, he's going to, I think, what did he say? Release the floodgates.
Yeah.
So get that extra supply in oil. That would be quite nice. Yeah.
But if there is no release of floodgates or indeed, more drilling of shale, and geopolitics don't kind of calm down, then we're in a situation, and that's going to be a problem, whichever asset class you're in. It'll change the landscape. Real question as we head out into the weekend. I mean, so far upbeat music. So far it's early still in terms of the earnings front. I know you don't talk about this. You talk about macro. Do you think the macro side is going to also mirror this? I mean, I was speaking to quite a few fund managers last weekend, all contacts of mine in the city, and they were saying that, everyone, wants to be cautiously pessimistic, especially with the yields, having that bit of a shock. We're highlighting concerns with the debt out there. However, relative to Europe and to the UK, the US in terms of equities still looking like we might give us decent returns in 2025. And that macro, if it stays as it is right now, or improves slightly, is going to support that. Is that the kind of landscape you're seeing?
I guess, yeah. I think, especially the last year or so, there's been a lot of reasons that markets and shares could probably, I mean, you say cautiously pessimistic, things seem to have just rise. And we've had a lot of times where you get a massive overcorrection because of a data point that's come out where everyone's kind of knew that narrative before and they've been forced to believe it, it feels like. I think it's been quite irrational in that sense. So I think there's definitely still opportunity for returns out there. It seems the market prefers to believe what it wants to rather than what it sees sometimes.
Cool. And speaking of what we believe and see, one of the things that I can tell you, trader friends, they've been asking earlier today, Jack, so just looping you in, one of our trader friends asking, is there a way for, or an ETA for IG to support TradingView with data for spread betting accounts? And Tom has helpfully passed me this picture. You can already right now, and I'm going to put that up for you. This is for Carl Wolf out there, having my chart up. Can you see this, people? There we are. And we're also getting an answer back shortly from Tom when he gets the chance. I think he's in a meeting, but we'll also get away from the numbers question answered as well. Jack, just quickly, we're about to head to break. What are your plans later today?
Today, I've finished today, probably European close time. I'm going out after work, gonna go meet some friends. Hopefully have something to eat that's quite nice, but we'll see if we're getting, yeah.
Nice.
Busy on Thursdays, not sure whether we're gonna be able to make it, but let's give it a go.
Nice. Luca, a shout out to Luca, St. John's, 88 St. John's Street, not far from here. That's a really good place to eat. And they do a really good express menu. There you go.
Yeah.
Cheers. Speak soon.
Thanks, Ange. Cheers.
Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hello, welcome to the second part of Trading Experiences with myself and IG's Head of Tax, James Gordon.
Hello.
Thank you so much for coming back on with us.
Pleasure.
I didn't scare you off the first.
Well, let's see how this one goes.
So in the first part, we talked about, what made you think about, trading full time, how it happened, that what if question that you had to answer in your head. So now let's talk about when you started executing that idea.
Yeah, so as I mentioned last time, I went to a trading school to learn some basics. I thought I sort of knew all about it just from experience, but suddenly your eyes are opened. This is how the markets really work. Suddenly all this economic data that gets released every day, I didn't even know that happened. And like, so you would sitting there, oh, that's a weird spike. What's going on there? And then you would find out, oh, actually no, because the Bank of England would just announce an interest rate or something.
And everyone's trading that number.
So it was very eye-opening to what's really driving some of the short-term volatility in the markets. And then they threw me out into the wild, and it was about deciding what style am I going to trade? You know, there's so much choice out there. In a way, like, trading is super easy in a way, right? It's up or down. I mean, you can't really get many.
Well,
but then,
options you could.
I mean, if you had JJ on earlier, like he's the guru, I just feel very inferior to that sort of level. But yes, I didn't know what options were back then. For me, it was trading futures markets. It was up or down. It was. There's the market trades in a range.
Yep.
It breaks out of the range, it trades in a new range.
Yeah.
So you decide: do you want to trade the range? Do you want to trade the range, or do you want to trade the breakout? So fundamentally, it was pretty. There's not that much choice to make, but then your sort of human psychology then comes along and makes it a lot harder than it should be.
Yes.
So it was about working out for my own personal psychology what style suited me, the time frames, the kind of markets, the time of day. That kind of thing, and that didn't come overnight. You know, the day one sitting down there, it was like, oh, what am I going to trade? Am I going to trade currencies? I ended up focusing on currencies, liquidity.
Is this
all the
because
time.
It was something that you were familiar with, something you were
familiar with, and I just felt for my brain it was easier to analyse what's going on because it's all relative. Currencies are just relative. Like the pound might be rubbish, but the euro might be even more rubbish. I've been short euro for pound for about 4 years now. It's easy. You just sit there. It's never going to zero. It's never going to infinity. It's not like stocks and things that can go forever in one direction. Currencies kind of trade in massive ranges.
Yes.
So psychologically, it was easier to get into that because you sort of knew where the really big things were.
Yeah, and you had the central bank's kind of mood music giving you.
Back when I was doing it, that was a big thing. You know, we were in what were we? Where was it? Zero interest rates blend probably was. I lose track of that kind of stuff. But I focused on currencies. Somehow my sort of system, you know, you take lots of notes of every trade you do. You start building up a journal of how your performance is going. And for some reason, currencies worked better with my style of trading. So that is what I ended up doing. That's where we went.
Did you ever at any point think, you know, maybe I should, you know, trade something other than currencies? How did you do the research? Did you finally delve into it? We have so many of our trader friends out there saying, you know, I feel like I've only been trading two things, and then, you know, how do I branch out? How do I, you know, look at trading other financial instruments?
Yeah, well, this is the funny thing, isn't it? We all think we should be trading everything, but think how the pros do it in the banks. There's a desk that just does oil.
Exactly.
There's a desk that just does euro, pound, or whatever. You know, it's all very focused.
Yes.
And I sat there wanting to trade everything, and then I was like, how arrogant am I that I think I can sit here and trade oil against BP? And they've got a guy who just does that, just does WTI.
And
why should I be able to do that? But I did, because it's super fun and exciting, especially on a Wednesday afternoon when the data comes out. But I'll be honest, my system was designed on currencies. I traded indices and oil because they're fun, but that was much more at the entertainment end of the spectrum than I think if I go back and look at my trades, oil probably did not make me money.
And it's important to have that distinction as well, right? Like we hear Tom Sosnoff, Tasty, talking about how, you know, first few decades of his life, and probably, you know, still now, all he traded was spider. That's it. Day in, day out, spider, spider, spider. And it's about what you're really comfortable with as well. You understand the ebb and flow.
You really get to a feel. You start to sort of have almost like the spider sense, for want of a horrible pun. But you do start to just know, you hear, you know, you see economic data and it says, we think the market's going to do this and this. And then you're thinking, no, but I just feel the way things are happening on Twitter, the way some of the commentary is, I don't think that estimate of economic data is actually going to come out like that. You get this sixth sense of how the market will react to that surprise. But you only get that if that's the thing you just focused on every day, day in, day out.
You also, speaking of insects and animals, I notice you have a real keen eye for animal metaphors, and you started not just reading up on trading, but also you started a blog, didn't you?
Yeah, this was sort of therapy in a way.
How did you find the time?
I needed to find the time. I needed to stop trading. So yeah, I think last week we talked about how you do sort of mental resets and stuff.
Yes.
I joked about wine, or maybe it wasn't a joke.
Rich runs, I play the piano. I have a Kemble in my house that I just switched to.
Yeah.
So if I had a bad trade or if I had several good trades and I think this can't last, I hit the piano for a bit, hit the reset button. So what's your...
So for me, bad trading was writing about it. And good trading was the gym. Like my gym performances were amazing after good trades. Like I'd knocked 20 seconds off my time. It's amazing the physiology stuff, which we'll just talk about at some point, of how trading affects your physical being as well as your mental being. But yeah, so I started this blog called Zebra Trading.
Okay, let's hit it up.
Where there we go. Gosh, that brings back memories.
Talk us through the blog.
It was kind of about, the premise was, like we were talking about last week, can you trade for a living? Follow me on this journey of, I'm going to write about the real raw highs and lows. Like, you get a lot of people, especially on TikTok and Instagram, who are rolling around in piles of money and jumping out of Ferraris and stuff. That, I'm sorry, that ain't the reality of trading for a living.
I had this image of you jumping out of Ferrari,
yeah,
heading to the gym in your gym clothes.
Oh, that would be a nice thought, yeah.
But
yeah,
you're right, the whole kind of like, you know, every time I see someone going, I just earned 30 grand going for a jog with this algo and, you know, just leaving it to go.
It's, I mean, maybe it's real for one or two people, but it's just, it's pie in the sky for most, so don't believe that. So this blog was to try and bring some reality to it, and what I found very quickly on is how super interesting the brain is, and a lot of it has a psychological edge to it. I mean, I'm no writer. It's a bit naive style of writing, but there's a bit of comedy in there. There's real, genuine pain and suffering.
And there's also
quite raw.
cats. Is that your cat?
That's one of my cats, or was one of my cats at the time. And it's worth, if you're interested in the psychology of things and sharing in someone else's pain and realising you're not the only one who's just blown your account up, have a little look at that, because that's a place to go. And it's called Zebra Trading, back on the animal theme. I know I mentioned zebras to you the other day and you thought I'd gone mad. So a zebra, this is back to the pen that Isar were going to invent to have amnesia. So zebras are very good at dealing with the fight or flight response. So when you're in a trade and you're losing money, our natural reaction, which is just programmed into us from evolution, is fight or flight. And the brain's just trying to get you out of that risk position as fast as possible, which tends to mean you shortcut your thinking bit of the brain and you just react and get out. You don't think properly. And that often means you close your trade when you shouldn't do, for example. Zebras are really good at dealing with that. They get chased by a lion, absolutely terrified, hormones raging, cortisol everywhere. They can metabolize that cortisol really quickly and then just go back to eating the grass as if nothing had ever happened. And that's the perfect thing for a trade. You just lost some money, whatever, done. Come back, go back to eating your grass.
Hit the amnesia button.
Do it. And that's, so that's why it's called zebra trading.
Right, interesting.
And I'm quite into animals, so there's always got to be an animal thing.
I hadn't noticed. Is that scientifically proven that they can just switch off like that?
Yeah.
I wish I had that.
It's a great survival mechanism, because if they were worrying about it, they'd be sitting there going, "Oh, did I run the right way?
It affects their health.
Do I look good in these stripes?" They'll just be worried about stuff and not actually getting on with just eating grass and
trading and jumping back in and doing that reset in a logical manner. So just very quickly, also you read a lot as well in that time to kind of structure out your day.
Yeah. So actually, that's a perfect. It's like you've done this before, like a perfect link. On the physiology side of things, there's an amazing book called The Hour Between Dog and Wolf.
Okay.
John Coates.
Yes, let me get that up.
He is a psychologist who turned into a trader, or a trader turns into a psychologist. I don't remember which way around. But he's written this great book about, so there's lots of good psychology books, right? But this is about what's actually happening to you. What is the hormone that's going through you that's making you feel like you feel? Why does that happen? How can you deal with it? And for me, it's probably one of the best books about trading, even though it's not about technical analysis, it's not about macroeconomics, it's about why do you feel how you feel? How can you harness that? How can you take advantage of it? How can you fight against it and understand that just walk away? You know your brain is in a mode where it's not thinking straight. Get out. get away from it. So,
or have a pit stop.
yeah, exactly. Go to the gym, do whatever.
After reading this, did you have a really good, just whacking up the book that James was talking about here? Did you have a real sense of this is when I'm optimum? We talk a lot about this, and you know, our trader friends, R. Sachs and Andrew McKelvey, Monkey Man, I hear me talk about this a lot. It's not about, it's as much when you trade, when you're optimum, as what you trade as well. Like, you don't want to be trading, but for you, did you find an optimum time or the signal when it's optimum for you?
That's an interesting question, actually. I mean, there was probably about 3 minutes a day when maybe I was optimum, but it's a good one. I have to say, optimum. I was probably at my sort of sharpest that first half hour of the day. I would always, when I was at the trading school, I would walk across London Bridge, put some kind of tunes on that really, and I would feel taller, and I would walk in that room, know what target I had to hit that day, and just feel completely energized.
Nice.
But then by 10 a.m. that energy is gone. Go away. I
Yep.
think you were talking the other day, have a coffee, have some sugar.
Yeah.
But that's different for everyone. Like nowadays I find, you know, in going to the gym, for example, I'm useless in the morning. If I go at lunchtime, best times ever. Evening, I can barely get in the door. Mornings, it's a real struggle. So you just get to learn when you feel your sharpest.
Yeah.
And if you're not feeling your sharpest, probably put the mouse down. Probably don't trade. Go and do some research.
Yeah. Take the eyes away from the screen. Chimp paradox. You talk about this quite a bit as well.
This is a great, the Chimp Paradox, great book, great model for understanding how your brain works in a really easy way. Right?
Yeah.
There's the chimp, which is the bit I was talking about earlier, the sort of the automatic bit of the body, which just gets you into situations and gets you out of danger fast. There's the computer, which is sort of the thinking bit, and then the other bit of the library or something, which is all your sort of stored experiences. The guy who wrote it, it's such an easy way to understand, again, why you are who you are, how you're reacting. And once you frame it into this, again, if you read the blog, you'll see I'm talking about my chimp all the time. My chimp did a lot of trading. And funny enough,
So how much
that
trading?
wasn't the best trading.
How much trading did Gordy do, and how much did the chimp do, percentage terms?
Well, so let's start. In the early days, I think the chimp was in charge 40% of the time.
Okay.
By the end of this, once I sort of got him in control, gave him some bananas, by the end of the sort of thing, we
Some
probably
nuts.
down to 5%. But it's
Nice.
amazing what wakes that chimp up. My worst ever trade, or trades, I didn't have one bad trade, to be honest, but it was a pattern of trade. So I got a speeding fine. My wife came up, put a speeding fine in front of me from France, and I was like, well, that's annoying. That was 100 quid or whatever. Totally irrelevant to trading. But suddenly, my chimp wakes up, goes into I'm really angry now. We're going to make that back.
Yeah.
Funny enough, those trades are not very good.
Interesting.
And they start off as 1, 2, 3, and then you've dug yourself in a hole, all because you've let that chimp take control and anger and revenge rather than planned trades. You shouldn't really be hitting at market very often. You should be putting your orders in the system and letting your process play out.
Exactly.
Not
And that's
revenge
why I
trading.
love the tools on IG where we can set strict stops or have it in steps. And also the fact that I try and always, if I can't have my eyes on the screen all the time, which is how I like trading, then I make sure I have my take profits in place too, because something good doesn't stay good forever.
Yeah,
Right?
those are the best trades, all planned out.
Just very quickly, we just have one last graph to show. This is to do with prospect theory. Can we hit that up? Look at this chart here.
Yeah, so I think Izar maybe mentioned prospect theory the other day. This is the thing where a £100 loss feels twice as bad as a £100 gain. And that's interesting in itself. But the thing to realise about this is this should help you think about which trading strategy to trade. So maybe you've got a strategy which the classic is 3-to-1 risk-reward ratio. You have a few big trades that cover lots of small losses. But actually, if you apply this theory, maybe all those small losses really hurt, and psychologically it's bruising. You might be making money, but it's really hard. So maybe you actually want a system that's the other way around. Lots of small wins and the occasional big loss, but the math still adds up. Psychologically, that's easier to deal with. But the one thing to look at on this graph is that bottom left there, that sort of just above the TIV on the negative. That is the dangerous bit of prospect theory, which is less talked about, is where you get to a point where you've lost so much, suddenly they don't hurt anymore, I've lost half my account. Well, I'll just lose a couple thousand more.
Yes.
And you get into a real dangerous cycle of this is where you blow your account up, because suddenly the losses don't hurt anymore. They hurt a lot, and then suddenly, I'll just go for it.
Yeah.
And that's where you blow your account up. So if you're starting to feel like your losses don't hurt, you're probably there. Probably get away.
That's right. Leave the desk. Make sure you close out, because James is right. At that point, I was thinking about a quirky term for it. Maybe, you know, Gordon's Gorge. Point of doom.
Gordon's Gorge.
Yeah, Gordon's Gorge.
Answers on a postcard.
Yes. Any questions, do send them in on ask@ig.com. There is no question too hard, too difficult. We will get it answered. But that's a really good point. We always say here, make sure you have your guardrails. If you feel like it's so painful and you don't feel the pain anymore, as Gordy was saying, or the fact that you're kind of like, I need to double up to make it back, it's time to get out. I'm very excited. We'll be having you back for another 4. And the next one, we will look at how you then executed the chimp, the zebra, and also the dog or wolf.
Hello and welcome to IG's Look Ahead for 2025. I'm Chris Beecham, Chief Market Analyst for the UK, and I'm joined by a trio of wonderful people. We have Rich McDonald and Angeline Ong from Trade Live with IG, and of course Axel Rudolph, our Senior Technical Analyst. We'll be talking about what's happened this year and what we think might happen next year. Who wants to go first? So we've had a year which has confounded strategists across the board, which I'm sure Axel feels very smug about, because he's always the kind of person that says don't predict what will happen. But you've had 2 back-to-back 20% years in the S&P. You've had gold at a record high. You've had the dollar surging. You've had Bitcoin at a record high, and you've also had even the FTSE 100 has hit a record high. Everything seems to have gone up this year. What do we all make of it?
I think it's incredible that you pump $8 trillion into a pond, you know, and then 3 years later everything's at all-time high. It's almost as if, you know, there's a function of money, and that creates inflation. You know, I'm hitting with the sarcasm early on, Chris, with the early punches, but how long can this go on? And how much of a mistake was it from the Federal Reserve and central banks around the world in the first place?
Well, you could argue maybe that they didn't hike as soon as they should have done in 2021, maybe because if you remember, inflation was deemed to be transitory. Now, you might argue it was transitory, just not quite as transitory as they said it was.
Well, the issue now is the genie's out of the bottle.
Yeah,
and
you can't put it back again.
Exactly, and no one wants to go against a trend, and so no one wants to leave the party whilst everyone's still dancing. And so here we are in this still melt-up as we speak, right?
Yeah. Would you call it a melt-up, Axel?
Not yet. I mean, I've seen 2000, the dot-com bubble, and we're heading into that territory.
Yeah.
But things can continue to go up longer than we can go short against it. So just be very careful.
My favourite definition of a bubble is something that's going up that you're not long of.
Yes.
That's the way to look at it. But anyone's favourite market so far this year?
I love the Nasdaq, as everyone knows, and so I was quite tickled when I asked Monty earlier today to talk about his sentiment. So he does this daily and weekly sentiment report that our trader friends love, and he was taking a look at the Nasdaq and also, you know, the Teslas and Nvidias, and actually looking at both institutional, you know, the fund management side of things, and even our own IG client base. It's still net, you know, long. They're holding their longs there.
But then I think we got to look into, you know, what is fund management and how is it judged? And you're judged by a benchmark, right? So you can't step out because everybody else is still in. Now, it takes a very brave person to make that first move, but it doesn't take much of a catalyst or a pinprick. You know, we just don't know what it is, obviously, otherwise we'd see it coming. But it's coming. There is no way that we can sustain 2 years going into a third year of a 20% move, 15% move, and everybody predict it, and everybody benefit from it. We're starting to get into this territory that I think I've only felt in 2007. I mean, I remember 99, 2000. I remember trading for the first time, I think. But the real feeling was from 2006, 2007, when we would look out across London and there was cranes everywhere because construction was on fire. And China was obviously buying all the resources it could. So you would be long miners, you would be long steel companies, you'd be long the equipment manufacturers. And that's exactly what it feels like now with AI, with power. There's so many themes that are running concurrent. And nobody's getting hurt.
Yet. Yeah.
So everybody's benefiting.
If you look at fund managers on the Bank of America fund manager survey just showed us that we are now at record levels with regards to investments in equities. They don't hold any cash whatsoever. So everybody's long. Everybody thinks this Goldilocks scenario in the States is going to continue. I don't think it can, as you say, Rich, for a third consecutive year.
Then I look back for the last time that sort of happened. The last time it's really gone that way, it's gone from being net cash to very high allocations to stocks, was sort of 2009 to 2011, and it sort of peaked about February 2011. But you had a big surge into the back half of 2010, and it was another 6, 7, 8 months before you finally had then it was a sort of 200-300 point drop in the S&P. So if you increase that now, it's sort of, 1,200-1,500 points. We're not talking about 1929 style levels, but...
Well, we never know. We don't know.
Well, no, of course.
But what I would also look at...
But we do, sorry, Axel, but we know the central banks step in now. Because the very first sign of any trouble, and the central banks seem to think that they're there to ride to the rescue. So this is why people have become so complacent, because you've got that Fed put now. And that's why I think you need to look at gold. You need to look, at your stable, fixed supply. I almost said the dreaded crypto there, but I won't be drawn into that. Whether it's, you just need to, in my opinion, be defensive, be safe. But I know...
Well, I mean, the way I'm safe is just I'm moving my stops closer now to the market than I used to. So I'm just becoming more careful. And also what we've looked at, Chris, you and I today, is breadth. If you look at the S&P 500, we have very low breadth. Now, there are some studies which you showed me, which I found quite interesting, saying that actually when breadth is low, you can still have a roaring bull market. But can you have it 3 years in a row is my question.
Well, yes. I think the point is that you've not really had... We had... This year we had the standout event of the year must be August, and I think I sort of conflated with Nvidia's earnings sort of tilted everybody off, and then you had the Bank of Japan hiking rates, and then you had that crazy Monday in August when everything seemed to happen at once, and that was probably the main volatility event of the year, I think.
The perfect storm.
Yeah, the perfect storm, but that dissipated really quickly. Almost by the end of the Monday, it felt like things had calmed down again.
The same as Super Tuesday, that's a good point as well. It all bounced up after China's Super Tuesday. Rich was here in his China red top. And then by the end of the week, it just all dissipated again as well. And to your point, I agree, we cannot have 3 consecutive years of these gains. However, and this is to your point, I do think it may not be as bad if there is a correction because of that AI factor. And a word that you said this morning, which piqued my interest, was energy. Many people out there don't realize how much energy AI is actually going to take. This is going to support entire whole sectors across the board. We have a legion. I think I saw stats out there somewhere that 30 billion pounds worth of energy. Someone tried to quantify how much energy and water, by the way. There's some places in the US that are now drought situations because they need to cool these servers that are being manned by...
Well, doesn't that tell you it's unsustainable, though?
Well...
This is the problem. We're pushing... It was exactly the same as 2007. 2007, you were worried that you wouldn't be able to feed everybody. So that was the growth of Monsanto. And Monsanto was the AI stock of the day because it could solve the world's problems. Well, how did that end up for Bayer? How's that in
The
Monsanto?
only difference is we don't have governments reliant on Bayer, but we do have governments reliant on the Nvidias. We do have governments reliant on, Broadcoms. We do have governments like the Chinese government that are, making their own strides in those fields, with robotics and with autonomous cars. Those cars, all of it needs a huge amount of energy, which will have to support this somehow. We're even talking about AI now spurring the return to coal-based energy, right, across the world. So there is a lot of demand, if you like, for that. And when it reaches across sectors and countries and governments to change regulation to support that, then you're dealing with potentially a different landscape for markets.
Yeah. But if you look at energy, for example, let's take the UK as an example. Even disregarding all of AI, we haven't got the energy. If you wanted to switch all to electric cars tomorrow, we wouldn't even be able to support it. We haven't got the infrastructure. We haven't got any of these investments. It takes a lot of time. So what will happen in the meantime, as you say, Richard, is that we might actually get suddenly the market waking up and saying, well, hold on, we can't sustain this anymore. And then we might get a correction.
So we've had NASDAQ, your market for the year.
NASDAQ, yes, it was the first trade of the week, and
you're not allowed to say one. You have to have a conversation.
You know, I love the DAX, and the DAX is really fascinating because basically because I trade it, and also because I've traded for 30 years, I pretty well know how it's working. But and when I say that, I mean the volatility, not, I don't have any inside information, but it is really the big beneficiary of the French political turmoil, is it? And the fantastic thing for people along the DAX is it's up 21%, so it's outperforming all the other European indices. Still underperforming some of the US ones, but if you look at the German political situation, it's actually not better than the French. I mean, we had a no confidence vote yesterday.
The situation is almost even worse.
And the economic situation is worse. I was going to come to that. So how come the DAX is making new all-time highs?
It's the odd one, isn't it? Apart from SAP, which is the big weight. What is the weight of SAP in the DAX these days? I don't know.
It's pretty low.
It's the biggest one,
Well, I don't know the exact number.
Or could it just be fund managers going, well, we can't put it in,
well, that's
in
exactly
the
it.
So where's the next safest place, right?
In Europe, and they have to allocate to somewhere in Europe, and therefore it's Germany.
Yeah, and it's the largest economy. Okay.
And then within Germany, then, they don't want to be long the German autos, so then they get hit even further, and the money's moved into. So I'd like to see the breadth of German.
That's an interesting
German index as well.
Yeah. Well, yes, definitely. That's a really interesting point. And so we've got the NASDAQ, DAX. Pick something that isn't an index. Come on, pick them. Gold. Okay, that's good. Yeah, one of our most popular markets. It's record highs.
It's the only thing that can let me sleep at night.
Yeah.
I
barbarous relic.
Today it's just I think broken through this morning where we were on a show. It looks like it's from a technical viewpoint starting to head higher again. But gold.
I'm not talking about a 3,000 target, 3,500. I think it goes to 5,000, because I think you start to see in 2025, you start to see the creaks come into the financial system again. And we, you hear me talk about it so often, Chris. The sustainability.
Where's my buzzer?
Yeah, the sustainability of the debt path, and the being able to pay, because it doesn't look like inflation is going to suddenly turn down again. And funnily enough, the wealth effect and continues to drive that consumer confidence. So the consumer's not slowing down. So I think 2025 is all about the re-emergence of inflation. And I think that means that the bond vigilantes will come into the US market at some point, and treasuries are going to start to get a little bit scary. And we've already seen the 10-year in the UK. That's the highest of all the G8s.
Yep.
Are we immune here? I don't think we are.
No, I don't think so.
I mean, if you said to me at the beginning of this year that French government debt would be more expensive than Greek, I know it was only for a few days, but I would have called you mad. And if you said to me that CAC 40 would be down 2% at the moment year to date, I would also have said, well, this is ridiculous.
So does this mean Italy's the safest place in Europe right now? Can we?
Well, some people, that's why, some investors who shorted the CAC 40 last week basically were so surprised, or 2 weeks ago, that it rallied, but basically they were too late to the game, because it was more sell the rumor, buy the fact, buy back your shorts. So at the moment, fund managers are actually getting slowly back into again, I think, dabbling with the CAC 40 again.
Back to gold, I also like it not just from a safe haven point of view, but you need gold for all forms of technical goods. You know,
it's an industrial metal as well.
Industrial metal and quantum computers need it. And let's face it, Rich has seen my laptops grow on my desk. He's got a picture, and thanks to IG's very, very high levels of security. But you've got 3 laptops, got 2 mobile phones, big screen there. We're surrounded by machines, people. All these machines, including the quantum computing and the things that drive the LLMs, XPUs, the GPUs. All that's going to be needing gold, and so will exploration into space. I know it's a lot way off, but all that's going to feed into on top of that safe haven sentiment.
And if you have something with US Treasuries, you're bound to get central banks buying more gold again, which is a big feature of this year, wasn't it? Chinese central bank.
They never actually ever say how much they...
Oh, no, of course not. Never talk about your trades. The moment you talk about a trade, it's usually the sign that it's going to go wrong. At least I always found. So that's 2024, and we obviously had political events as well, most obviously the election, the re-election. Can we call it re-election? The election again.
The Labour Party?
Of the Labour Party, yes. But also, the more importantly, I think, in the only economy that matters, the election of Donald Trump as president again of the United States. The first president since...
I read that recently.
Yeah, there's one other guy that has served non-consecutive terms.
He's the 4th.
It's an orange cat, that's your clue.
Orange Garfield?
Yeah, President Garfield was the only other one to serve non-consecutive terms. So there you go. First one since about 1890, so that's interesting. But obviously he comes into office early January. Where do we go from here? What's our... as we peer ahead into you look into our crystal ball, into 2025, what do we think happens from here?
I think he's going to be... like before, he's going to have a lot of saber rattling, tariffs, he's going to launch it left, right and centre. But as per usual, you have your talks, and we already see this mood music change, Rich, right, in the last 2 weeks, from trade war to trade talks. And
he's even invited Xi Jinping, although he's not coming, but he did say Xi come over for the inauguration. So it's an interesting...
He actually say Xi come over for the...
Well, no, I'm sure he said, hey, you.
Hey, you, yeah, you. Yeah. But we're going to see, this sort of pulling back, right? Shooting above the bow, pulling back. And then the tariffs aren't going to be as bad as thought on both sides, because China will hit back as well.
Was this becoming too complacent a narrative, though?
Across the board in every single...
We've done the whole... he goes for the... I'm guilty of saying this myself. He goes for the negotiation, and then it comes down to a lower level. This time around, it's his last go. So does it go for broke?
And the team that he's built around him.
Well, yeah, this is the thing, isn't it? He knows... we know how it worked last time. You don't waste the first... With any new government, it's don't waste the first 100 days, because that's the biggest chance you have to get done. He has both houses with him. Are we almost understating the risk that he actually really does pressure everybody else?
Chris, you know what the biggest risk, I think, is?
Go on.
The fact that we've got Elon Musk and him in the same room. How long are those two egos going to get along for? How long can they, work together for before it all kind of falls apart?
Which is why it might be a case of buying the rumor, which we've all done over the last few weeks, and perhaps sell the fact in the first quarter of next year. I don't know. I just think at some stage we will have a slowdown, at least in upward momentum. And then the question is, are we just going to have a 10% correction, or is this going to be something...
What if it's like 2017? If you remember, quiet, strong rally, no more than, 2 or 3% sell-off almost all year?
But I think
that one?
That because we and all the algorithms knew that was 2017, it's been packed into the last...
I think so too.
6 weeks.
Maybe.
So all the returns have been brought forward.
Yeah. If you look at people massively underweight the US in 2016, there was a lot more caution. This time they've already front-run that, so it's a very different dynamic.
And there was the huge benefit that he manipulated taxes lower, So the S&P earnings were automatically 15% higher. So you almost had justification for that big move in 2017.
What about oil prices? I'm talking about oil prices because we've not really covered it. It's not been a great year for oil, to say the least. You've had the first ever direct conflict between Iran and Israel, which I think is a moment that, though it's gone off with very little consequences, very few consequences, you can't understate the fact that the two big beasts of the Middle East have finally decided to start having a pop at each other. What does that mean for oil prices? What happens with oil next year?
Remembering that it's now oversupplied.
So does that continue?
I think I'm more lent towards weaker oil prices and it to stay weak, at least in the first half of next year. And with Trump in play, the fastest way of him getting Americans feeling like they've got more money in the pocket is to get prices down at the pump. I mean, it's incredible, isn't it? People in Chicago, they're complaining it for $3.50 a gallon.
Everything's relative.
I know. And then the Texans it's even cheaper over there. And even then, it's like when they look at us, they laugh at how much we have to pay for petrol, for cars in general. But I think it will, it will be weighed, shall we say.
But look, had we had this same discussion a year ago, and had we said, oh, there's going to be this big war between Iran and Israel, we would have said oil price at $100.
Yes, exactly. It's another lesson in trying not to predict what the market will do, because even though you know what will happen, although what the event is going to be, you don't know what the market reaction's going to be. So oil, Europe, we should talk about Europe. These things might go well. Where are we now? So German elections, February?
23rd, yes.
23rd of February, and that's for the Bundestag.
Yes, the parliament, exactly.
Yeah. So, and then
they don't walk into office and start getting policies out week one.
No.
It's
like everywhere. It takes a long time. Yes.
Yeah. So you
need to have
Germany is.
You need to have coalition talks. I mean, look at France. So yes, I mean it takes months, and we won't know before probably the beginning of summer whether we've got something stable in place or not. The question is what will happen in France in the meantime, because I don't think François Bayrou, our new prime minister there, will have an easy task at hand. And if Michel Barnier failed, how can he succeed?
If they succeed in toppling another French prime minister,
in 3 months.
What does that mean for Macron?
It's a tough call to make, and I think there's too many different scenarios there. What the important thing is, until May, and at the very earliest, the two biggest economies in Europe are impotent. And there is nothing that is going to come out of either at a time that the economies are slowing. The ECB, is trying to put a brave face of it. Christine Lagarde saying that they've declaring victory on inflation. I mean, please, that is just.
What she needs is a banner that says "Mission Accomplished" behind her, because that works so well for Bush.
So I think that it's really, really worrying, and US is not immune to the slowdowns in China and Europe. And we, as far as they're concerned, they seem to have completely forgotten the rest of the world as well.
Yeah.
So
there's always a blowback, isn't it? Really, that's the problem. So
and Europe's stuck in between, so it's looking vulnerable in a time when we've got Trump and also a weakening China, right? Because normally you can have maybe the US and a stronger Europe kind of lift each other, or if things aren't working out right, then everyone's looking at the China shot in the arm.
Yeah.
There is no shot in the arm, at least not that we've seen. We've been watching out. They tried, but it was just like a little tiny taster. It wasn't the main course, right? What I think will be key next year is that there is a lot of money out there that has already been made. I was trying to find some concrete figures today. I think it was in the billions in cash pile by the likes of obesity drug makers. And it's sitting there, and I think next year will be the year when they have to deploy this money. So your Eli Lilly's, your Novo Nordisk, they'll be going shopping in 2025.
Okay, that's very interesting.
And they're going to be looking for like the likes of Pfizer, for Astra, for even the small one like Terns Pharmaceuticals, to try and bulk themselves up pardon the pun, now that they've made a huge amount of money with Wegovy and Ozempic.
They can't just return it to shareholders.
They don't.
That's what you do when you run out of ideas, isn't it? That's what people say about dividends. Buyback. It's what you do when you're stuck for ideas. But then central banks. We should talk about central banks generally for next year. What do we see from all of them? I don't know, the Fed to start with?
Well, the Fed, we are expecting at the moment 2 more rate cuts, don't we?
Well, no, 3 priced in, I think.
With the one that we expect this week, yes. So I meant 2 more to come next year. But in my opinion, with, as you said, Rich, inflation perhaps being back on the cards, we might not even see that. So perhaps just 1.
Well, certainly the CME Fed Watch tool does imply there's a huge amount of uncertainty out there, even for the ones that were priced in, because we're seeing, Issa and I were looking at the charts going, never seen this, you know, January, no cut, February cut, then March, no, you know, it was just, you normally see a tapering, but this is just all over the place, looking out.
Guessing, essentially.
What do you reckon, Chris?
I think they really do pause from January for a while, I think. Look at where they are with inflation. There's room for that to appreciate a bit more. So the moderation of language, I think, is the first step, really. And I don't, how much is the market fully prepared for that?
And remembering that the government have to pay back their debt, they have to refinance, but companies took a load of cash in 2020, and they haven't need to come back to the debt markets since. Yeah. So if you're coming back to the debt markets and your financing is 6.5, 7, you know, how does that look comparative to where you got debt in 2020 at 1.5, 2? Yeah.
But talking of debt, if you look at US household debt, I think it nearly hit $18 trillion in the 3rd quarter of this year at all-time record highs. It always is, but it's getting to a point where also I think the average rate of credit card repayments in the US is something like 22-point-something%. So all of that at some stage is going to bite people in the proverbial, don't you think?
Quite possibly. So the Fed's slowing down. Talk about the ECB.
Well, but just before we move on from that, the real, it can't afford to slow down. Right, because of the problems of household debt, because of the government debt. So, you know, where do you get that? Do they continue? Do they raise their inflation target to 2.5% rather than 2? Because they're not going to hit 2 over the long term.
I think that's
and if they do it, I think the prime time for them to do it will be the summer months, because my memory serves me right, if they compare it with the inflation rate in the summer just passed, then we're going to see a huge comparison, right? Because
well, then you get a collapse in the bond market and pension funds start to have serious funding problems again. So that could be the, you know, number 1 on the list of what could stop this bull market. Yeah. Well, it's a fund.
It's a fairly big one.
All this is saying to me is, and buy gold, buy more gold, buy more gold. Royal Mint, by the way, apparently is about to push out a new tranche of physical gold.
Oh, right. Get it now. Yeah. So the ECB continues to cut. Do they have to go more next year?
I think they're forced to, aren't they?
Yeah.
Yeah. So which, therefore, you've got a euro. Forget parity. Parity's done. If ECB's forced to cut, and we're talking about the Fed, only 1 cut, and that's the December one, no cuts next year, then we're talking about 90 cents rather than parity. So the euro tumbles.
Yeah. Which imports inflation again, which is a problem for them. And then the Bank of Japan, we should talk about them.
Well, we're not going to see a hike this week, I don't think.
No, I think they've come back in again, haven't they?
Yeah. But next year, I'm pretty sure we will.
It feels like it. It does feel like it. And they've already warned, haven't they? The head of the Bank of Japan saying that it's almost, time is coming to almost have to make the next step after shocking markets in August.
Hopefully they won't be as cavalier as they were at that time. So you have to pick one market for next year that you think will be interesting. I'm not saying to make a call on where it will be, although I think you've rather nailed your colours to the mast with gold.
No, that was last year.
Oh no, but if you go to 5,000, surely that's the key. But
well, yeah, that's only 100%. There's another market that you'll get more than 100%.
Yes, that's true. We'll move on from that one. But okay, something we think is interesting to watch for next year?
So I do, Jess, it's the VIX.
Yeah.
So where will the VIX peak in 2025? I think we reached 65 on August the 5th.
Your magic number is 25, isn't it?
That's it. I really take a step back and get quite worried when we go upwards through 25, because that doesn't mean that it's stopping there.
No, of course not.
Usually it goes on. So that's what that will be the real sort of red flag, or on my radar, is the watching for a bit of volatility to come in.
I honestly don't know, because a lot of markets are very, very interesting, but I think next year will be a trading market more than anything. You can't just be long at the beginning of the year and just run it until the end of the year. I think you'll have to be nimble and perhaps keep positions for a few weeks, a few months, and then switch. Whether that's perhaps not the dollar, as I agree with your view, Rich, that the US dollar is probably going to continue to appreciate globally. And perhaps you can trade that against the British pound or the euro, for example. But
I concur with Axel. If you're looking at indices, then you need to understand how the mood of the market is changing, and you'd be in and out, and be prepared to change your theory as we go along, because we have so many different moving parts and dates priced in where it could really shape the markets. We've got the inauguration on the 20th. Prior to that, we've got the 7th of January, the NVIDIA CES party. They don't call it party, but the great unveil.
Right.
I've been told to people that if you can get a ticket into that, do go in, because it is absolutely mental. And Peking duck and champagne coming off the walls.
Very much a top mark.
I was going to say, whenever the mining conference in Miami was always the peak, and it was in crypto in 2021 as well.
Yeah.
So that could be.
That mood music really does and can set the tone. If they come up with bad news, then it could shape, whatever you've got in mind. Your theory has to shift quite nimbly. But I think the most interesting market for me will be I'm looking closely at the energy producers tied closely to the Broadcoms. I'm also waiting to hear what Broadcom Avigo says about its GPU, XPU. So they're building the veins. NVIDIA's got the heart, if you like, but it's very expensive. They're building the GPUs, the heart of the engine. But as the veins get better and Broadcom can service this part, and their chips are like the veins of the market, they're hoping that more and more of the market take to their chip, and this might erode NVIDIA's market share. So I'm looking at that and the energy play, plus a lot of this M&A that I expect to see starting next year with the obesity sector, obesity drug sector. Did you know that currently around 7 people in the US out of 10 use these drugs, whether it's for obesity or just for beauty, and it's going to be a huge growth market here, because currently in Europe numbers show only 2 in 10 take these drugs, and these are only the ones that.
Are we more healthy in the first place?
Oh, one would hope
in
so.
the UK. No.
That's only you, Rich.
What about you, Chris? Your play.
I think the interesting to watch will be we see continued departures in the FTSE 100. That's the first thing we're watching, because it seems to lose one major company is unfortunate, 2 is careless, and after that it starts to become a trend, doesn't it, really? So that's the number of companies we think will just continue to up sticks. But in some ways, talking to you three makes me more optimistic about US markets. I understand that everyone seems to have issued the target for next year being 7,000. It'll be up another 1,000 points because we were on the last 2 years, so this year it definitely worked.
Yeah.
But it's always that, oh, it's gone up enough, it can't go up anymore. But I'm slightly cautious. I think it looks awfully toppy in the short term. It's not a case of I wouldn't blindly rush in now and buy it at 45,000, wherever the Dow is now, 1,000 points lower. But it's still, I think it might still shock people a little bit.
I guess the question is then, what do you see for earnings growth? So 13% earnings growth is already priced in, so it has to be higher.
But this is the thing, isn't it, really? I think a nice sort of... The first half's a very wide sort of time frame to give it, but if you had a nice sell-off in the first half of some degree, that could do an awful lot to just reset expectations. Because that's what you want. If you want the market to go higher, you should still hope that it actually has a bit of a sell-off, because if it goes up and up without interruption,
That's not healthy.
The hangover is always the problem, I think, and that's the risk. So if there was something just enough to spook people, a little bit like 2023, remember the Silicon Valley Bank stuff? That really shook people.
That came out of nowhere.
Yeah, that did more or less come out of nowhere.
Or 2008, we had Jerome Kerviel of SocGen that had taken a position along the Euro stocks. And a gentleman I actually had dinner with a few years later was locked in a room such as this, and he couldn't see any screens, that he didn't know what the market was doing. He had to sit there and sell billion after billion after billion of Euro stocks. He didn't know that the market was down 7%, but that's 7% on a day on January the 8th. And everybody's scratching their head thinking what's going on, and the rumors started. And that's how 2008 started. We know how it ended. So, you know, it doesn't, there's always something. Is it, you know, an SVB or is it SocGen or, you know.
This is the thing, isn't it? It's going to be something that you don't see coming, and that will be the problem for markets.
Which is why you need stops.
Yes.
You need to always use a stop.
Guardrails in place.
Common sense, yeah.
And I concur. We need some sort of you know, correction so that it's healthy. Issa talked about this on our show as well. You know, in terms of trading psychology, you don't want it to just continually going, you know, up and up and up. You want some sort of mild correction so it takes some of the froth out of the market, and then we can continue on our hopefully merry way again.
Yeah, the volatility is the price of admission, if you like, is what you should expect, really. Because we had this with the summer in video, which was down 30%. Was it more than 30% in August?
From its peak to trough. 125 to 92.
It's about that. Yeah. And everyone said, oh, I don't want to buy it now, because it might go down some more.
Look at where we are now.
You can wave it in front of them and say, look, it's a record highs now, and you didn't buy it. And that's psychology for you. So
the great thing is, of course, if you protect your portfolio with a put option, then not just do
another way of a stop
from it going down, but you also benefit from an explosion in volatility as well.
Yeah, precisely.
Plenty of options.
Plenty of excitement, certainly for the year ahead. So thank you for joining. Thank you for joining me. Thank you everyone for joining us, and we hope you have a Merry Christmas and a very prosperous New Year, and we will see you again in 2025.
Stocks are saved, or are they? It's Wednesday, January 15th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Dylan Radigan in Milan. We have, that's Nick Batista. He's in Tucson or Mesa, Arizona, perhaps, but I think Chicago. We're here to take you through the next hour as we wrap up this trading day. Futures market closes at 5 Eastern, 4 Central. If you're on the platform or the website, come over to YouTube. Tell us what you're trading, what you think of this big reversal in stocks higher here today. If you're already on YouTube, come join us on tastylive.com, see what we're all about. Guys, 8:30 a.m. Eastern came around and CPI came in warm, but not hot. And I think that was the fear. Bond yields break down over the course of the day. Stocks are able to rally. Gold, silver surge. Oil presses $80 a barrel. That's not a problem, apparently, for the rest of the market. We ultimately see an Israel-Hamas ceasefire deal come together, but that doesn't really cause much of any sort of price action reaction. And the dollar's down across the board. This morning, before all this came out, Nick, from the stock side of things, the banks were doing quite well. JP Morgan, Wells Fargo up after their earnings releases. So XLF is posting fairly sizable gains today. Nick, let's just take a step back and start with you as our returning champion, resident guest. What do you take of this market now? Are the bulls back in town, or is there still more work to be done?
I think so. I think next week is our last sort of volatility event of the inauguration, and the changing of the guards. I think we see this time. You have a little bit of volatility that comes into the market. You have all sorts of things that bid up that volatility. We've had PPI, CPI, we've had employment reports, we've had all sorts of messing around in the bond market and with the Fed, and it's all kind of, even though things are not perfect, so to speak. Like you were talking about CPI being kind of warm in the middle of expectations. At least the event is over. And I think that's kind of what this move today has been. I don't think we're going to continue another, 150 points over the next 2 days. Maybe we can, but I don't think that's really the move. I think it was more of just a relief. We got that out of the way. I think the next relief, or at least volatility event, is come Tuesday when we start getting all the headlines and the press conferences with Trump, which I think are going to bring sustained volatility for the next year or so in both directions. I think it's going to be back to 2020, 2021 trading, where you could trade on both sides of the market day to day. I think that's what we're in for, which is great for us.
So volatility comes off the board today. It doesn't sound like you're a believer in that. Spot VIX, which started the week up near 22, is now back to 1610, and it's inching into that territory where simply the best thing to do is be long the market and go fishing. Not quite yet, but we're almost there. Dylan, is this just relief today? Are we just relieved that inflation isn't running away too far, too fast for us, and maybe the Fed isn't going to abandon us this year after all?
I mean, even more than that, I would say we're marking a multi-month low in the U.S. bond market after basically months of bond selling going back to the Fed meeting and really the election. I mean, I think that you're at a point where it's now for Trump to make it like this. It's like if you're wondering, like, what's the bond level for current inflation and growth? Like, here you go. If they found a level, this would be my argument. And now it's whatever the new administration actually does regarding tariffs and deportation will dictate what happens next with the bond market. And yeah, to your point to answer your question directly, Chris, it is a green light for the Federal Reserve to continue to do something.
When we look through the data today, what spurs on that reaction? Nick, you said that it was kind of just in the middle, and headline CPI 0.4% month over month as expected. The headline comes in at 2.9% year over year as expected. The core is a touch softer, but what stands out to me is this decrease in breadth, or improving breadth, if you will. The share of overall U.S. inflation running above the 0.2% month over month run rate, because if you're above 0.2% month over month, then you're going to be running at a pace faster than 2.5% year over year, just if you were to annualize that month over month run rate. So right now, the components within the inflation report running above 0.2%, 51%. Okay, that's the same as the prior month. Those running above, say, a 0.4% month over month run rate, that's actually down. 39% of components are at that level compared to 40%. But in terms of what's causing the inflation, right, services, 49% of components are showing higher than 0.2% month over month. That's down from 54% last month. It's a small shift. But instead of inflation broadening out, where, we saw this throughout 2022, right? More and more categories of goods, we're seeing faster and faster rates of inflation. We're starting to see that on the other side. This isn't exactly the place where the Fed wants to be, because a 0.2% month over month run rate is still above the Fed's year over year target at the end of the day. But if we're not advancing beyond that, it means you're not in a territory where the Fed's going to look around and say, we need to raise rates. And I think that really was the fear coming into today. And it is that January OPEX week, Nick. So there's a little bit of unclenching right now in some of these flows. Tom was talking about the flows, or at least the January OPEX here at the end of last call. And I know it's going to be discussed a little bit more in the network tomorrow. But what do you think about this January OPEX right now? That December is the index month, but January is really the single stocks month.
Yeah, I mean, every year even last year, the first 3 or 4 days of trading were, the most volatile downside moves I think we had for most of the year. We had a couple little spots throughout the year that we had some downside moves, but the start of the year was volatile, and that's in part because of the changing in positioning, as Tom was talking about. You have all these market makers that are hedged for these long-term options, the delta changes. You also have this gamma exposure. And as we get closer to expiration, all that stuff has to come to zero. So in terms of like the exposure, you have to flatten out your overall exposure, and it moves so quickly. And I think that feeds into why we have been seeing these big moves over the last week or two, is because you have to have some of that positioning churn to get to, a flat point after January. And then, that all that stuff has to be unwound. And I think that's part of what's happening right now too. So, yeah, I mean, I think, I don't think this has been, if you zoom out on the market as a whole, like, it's not crazy to go down 5% from highs. Like, this is completely normal. We should be, everybody freaks out about these moves, and nobody, to the upside, the 5% upside moves are almost to be expected. From my friend group, I get texts when we go down 1%, but nobody calls me when we're up 2% to ask me if I should sell some stocks. It's almost like expected. And I think this is just a normal rotation and move. Like, I don't take it too seriously.
Our resident bear here, who is out for personal reasons today, nothing serious. He did quite well this week, to give him credit for it, right? Russell went and hit its 200-day moving average a few days ago. Ilya was able to get out of, and good thing he did on Monday, because the Russell's about 4% higher from where he got out. But it feels like, from my perspective, this has been a really great rally. We haven't learned anything new about the price action yet. The Russell is back into the congestion zone that it was in through the second half of December. When we look at the S&P 500, it remains in the congestion zone that we've been trading in for much of this year, and we still haven't broken the downtrend off the December and January swing highs. We haven't recovered through the 1-month moving average on a significant basis. The NASDAQ is still held within its downtrend from the December and January swing highs and hasn't reclaimed the uptrend off the August and November lows. This could go either way still, but today is an indication, it feels like, that there is relaxation now in this market. Dylan, you've been a big financial markets beat reporter for a number of years. You covered the market through the global financial crisis, notably. That's how I came to know and adore you. We see here the banks today are making more money than ever before.
I feel like it's very bank positive time in America.
Yeah, is this now the beginning? Like, have we just had the correction? Banks held up better than every other sector as the markets corrected in December and into the first half of January, and now here we are. They're up 2.58% today, doing better than any single index.
I believe that is exactly where we find ourselves, sir. I think it's going to be like bonuses and profits and banking glory. It's going to be like the good old days, like back when money was money and Ferraris were Ferraris, man. I think they're going to see bankers' money flying all over town for a couple of years.
Back in my day, money was something you held in your hand, not a seed phrase you held in your head.
Now, back in my day, it was something you used to buy a Ferrari.
So, Nick, when Lambo here? Are we going back to high soon?
Well, I was just going to say, of course, I think over time you go up and to the right. But I think there will be volatility this year. I was going to mention, though, Goldman Sachs, the biggest beneficiary of the bank earnings this morning, up at 600. You got to think, to just piggyback off what Dylan is saying, is that a lot of the euphoria in this space is pricing in a lot more flexibility in the financial sector, especially with, you got
the big man who's going to throw a party in New York.
Exactly. You're going to have SPACs come back. You're going to have share offerings and mergers and all that good stuff. Like, we're ready to party, baby. The money's back.
The money party's just getting started.
Yeah, there have been some really interesting quotes floating around in the Financial Times. So, Dylan, you can verify this to Nick. We were talking about this immediately after the election over time. Like, it feels like this is going to be the grift market for a little while. People like Chamath are positioning themselves to be allies of the administration. And this is someone who's lost oodles upon oodles of money for his investors in his SPACs in recent years. basically robbing the public blindly.
A vampire. He is a vampire.
Yeah.
Of the highest magnitude.
Forget the inverse Kramer ETF. Give me an inverse all-in pods guy ETF.
Yes.
I will sign up for that. But crypto generally speaking is doing well here. It has a very good day today. But the banks too. So Dylan, in what world, in your experience, when banks are...
I think the implication is more leverage. First, what's the number one thing that helps a bank? More leverage. Less restrictions on leverage is the number one lever you can maneuver at a large financial institution to immediately add to the bottom line, period. More leverage when there's perceived 4 standard deviation risk. Ooh, that is real good money. And so you have a 4 standard deviation event with the California fires, which will give you insurance pricing, mega pricing. And they're going to sell overpriced risk at higher leverage than we've seen since 2007.
Is that the fire not a short-term headwind for him, though? I mean, because you got to...
No, the fire's a chance to reprice risk higher
for
and
future.
Collect more money on all Chicago PNC, New York PNC, Miami PNC, and I can sell more property and casualty than ever before at a lower regulatory requirement for capital per dollar of risk issuance at the highest price ever.
For sure, I agree with that. But what happens with the entire situation there? Like at some point, I mean, it's
taxpayer is going to eat that. It's going to be a scandal.
Think so?
Beyond,
So you don't think
it's going to be a scandal beyond comprehension? Oh, it's going to be such a scandal.
So it's going to be like, what was it?
They've already set the groundwork for a state because it was uninsurable by any normal math because of the regulatory caps.
Yeah.
So the only choice that the insurance companies had was to pull or sell the discounted risk, which then the state stepped in with a state entity to provide additional coverage for those who were uninsured or underinsured. But that whole racket is over.
What's the racket?
The racket is falsely pricing it property and casualty insurance at lower rates than accurately reflect the property and casualty risk of that location.
It sounds like the racket's just beginning.
Higher. What's that?
I think the racket's just beginning. Like, are we ready to have the conversation nationally that we as taxpayers should be subsidizing people who live along coastal regions, wildfire zones in Florida,
Miami,
and California?
New York City, by the way, right in the bullseye of super risk.
Which means if we're going to continue to subsidize them, these insurance companies are going to take those risks less and less in the future. They're not going to be held by the end of a gun.
No. What you do there during the financial crisis, what you do is the irony is you actually reduce the price of the insurance and sell it to everybody because you incentivize more people buying the insurance and then you exist in the knowledge you'll never have to pay. So you actually incentivize more building in more places that are worse by selling cheap insurance because your spread is 100% because the payout will not be the P&C person because it's going to be considered a national tragedy. That's the implied risk. That's the sort of moral debate. That's the moral hazard, right?
I feel pretty strongly that California, if they try to force these insurance companies to do this, it's going to bankrupt every single one of them.
That's why it ends with the taxpayer. Too big to fail.
So then the insurance companies aren't going to be taking those kind of risks, which means that the only risks they have on their books are the ones that they'll never will not pay out on. So they'll just keep collecting
wider margin deals for them.
Which means like Look at KIE. This is the S&P Series Trust, S&P Spiders insurance ETF, KIE. We're up a healthy amount today, 1.42%. We have taken back all of the losses since the wildfires started. We're basically at the closing high for the year right now for insurance.
Like you said,
companies.
the racket's just beginning. Now everybody's going to buy hazard insurance at overpriced values, at higher leverage.
And it's backstopped completely by the taxpayers because you don't see anyone coming in and saying we're not going to.
100% margin. 100% margin.
Right. Yeah. Nick, I mean, it feels like this is a situation
Nick looks
like
with admiration. He's like, these sons of bitches.
I'm
He's like, goddamn.
They got us. They got us, Dylan.
Yeah, the insurance companies have us by the balls.
Yeah,
By
they
the
got
balls.
us. You can't beat them. You can't beat them. What a great business. Unbelievable.
I mean, these guys.
But this is also the thing like that really like, you know, you guys know where I sit on the political spectrum. I don't announce it every day. People can suss that out by the things I say, but for long-time overtime listeners, you know where I reside. You know, we may not like insurance companies, but the people that staff insurance companies, these actuarials are some of the sharpest math minds around.
They do good math. They do good math.
They know their math, right? And if they can't turn a buck, they're not going to insure it. They literally, you're only insurable if they think you will not pay out, right? Like that's the game here. We take your money and we hope to never have to pay out on you. We don't think you're a risk, so we're happy to take your money. So when they say, no, we're not going to insure you in these areas anymore because we don't think we're going to be able to turn a buck, that is a huge, huge red flag. So who's going to fill the gap? These insurance companies, they're either going bankrupt or they're completely insulated.
So
and that sucks, but that's
today
the
was
system that we
arguing
have.
there should be a private insurance exchange to compete with the legacy insurance providers, where the Nicks and the Vecchios and the Radigans can make markets selling fire risk to Malibu. And basically we can compete and participate in making, you know, and what are the chances that Nick's place in Malibu burns in the next 5 years?
0%. Nick doesn't. Like me, Nick doesn't have a place in Malibu.
Nick can't afford to live in Malibu. So if I'm back in the insurance, my premium is going to be higher than whatever AIG or any of the other ones are gonna give you. I mean, I think the idea.
But is your Chicago insurance going up because basically climate risk is perceived, or is a global? Because right now, catastrophic global climate risk or catastrophic natural disaster risk is not part of the pricing matrix of property and casualty. It doesn't exist. It's priced at zero.
Right, because in California, they call it, the insurance companies use CAT models, they're called, right? And
but how can you look at what Los Angeles and keep it at zero?
And California doesn't allow some like insurers to use the risk of catastrophe for natural disasters in their modeling.
Which is the singular primary risk.
Yeah, that's the only problem.
Very odd. Very odd.
Take the primary risk off of the insurance calculus.
Close your eyes. Close your eyes and insure it.
What about what if there's a rat? What if there's a raccoon infestation? They'll pay for that. If there's raccoons in the attic, you can get a claim. But fire, hurricane can't help you.
So how much, Dylan? How much you think insurance will go up, just generally across
50%?
You think so? How soon? Like now?
Now.
You know, gee, then
Right now.
no. Wow. Okay.
I mean, certainly in the situation, like if you want to buy insurance in California, Miami, coastal, like in the target zones, for sure, 50%. I don't know about everybody, but. And it's got to probably come in because it's going to be overpriced, all that, right? But if you went in today and said, I need a policy, the truth is, I don't even know how you get it. You'd probably have to go to like Lloyd's of London and get a custom contract for your land in Malibu.
Yeah.
Like, I don't think anybody would actually sell you a policy. To Chris's point, like nobody wants the risk.
I'm looking up the numbers right now on how homeowner insurance premiums changed in Pennsylvania and California over the last years, according to economists in a paper that was put out last year from the University of Pennsylvania, the average California homeowners insurance premium increased by 33%.
But Sacramento has a regulation restricting policy price increases, which is part of the thing. Reason they're pulled it with that, so it doesn't matter the pricing in California because it's regulated, which is why State Farm pulled out. Because they were like, I can't. Their actuaries wanted to price catastrophe risk at X, and they were not allowed to do it, so they closed up.
I made a mistake. That's nationwide. In California, home insurance costs have increased about 50%. since 2020. And it comes from this paper from the University of Pennsylvania. We can share this. I'll tweet this out later, how property insurance premiums are mirroring the climate risk. This was put out in September. So interestingly enough, Dylan, you say that prices are going up 50% in the natural disaster areas like in California and in Florida. They have
that validates.
So they're either getting non-renewals or the insurance premiums are going through the roof.
Or housing costs will come under pressure, where there'll be actually discounting of. It's a battle because the natural thing, what's going to happen here, not that, we can get back to this bond market, but housing is going to go up in price and regionally, even because of the shortage.
Right.
Everybody needs a house short term, but intermediate and longer term, it'll be a question of whether the value of extremely nice real estate in Miami, New York, and LA, for example, those three, gets any sort of a discount because of catastrophic natural disaster risk is higher.
Where do
Does
we build the
Malibu go on sale? I don't know. Doubt it.
Where do we move all the celebrities? Where are we putting them?
Chicago. Everybody's going to Chicago.
No way.
Coming
too
to you.
cold.
You're
I
going to
think
get priced out.
Vegas.
No, the truth is, the real answer to the question is, in terms of actual people's moving, is primarily as close as possible, right? So Santa Barbara is already, I'm sure, under huge pressure. Laguna, huge pressure. Like adjacent is by far. Then Texas and Palm Beach, Florida. Arizona, Phoenix, Texas, broader Southern California from Santa Barbara to San Diego, and Palm Beach.
I mean, I think I don't have any trades on in any of these insurance companies right now, but it really reminds me a lot of what we've seen around some of these isolated events with like a Boeing or a UNH. UNH dealt with the hack last year, and Boeing's, well, it's a little different. They're having planes fall out of the sky. Maybe it's more like what we see with the healthcare companies, Dylan, where these insurance companies have been given a de facto monopoly in the market, and they're too big to fail, right? So
I think that's true.
I mean, what's going to happen here, right?
Taxpayer
I know that
bails it out.
We've heard that the House of, the House of Representatives is thinking about conditioning some of the aid to California based on various reasons, and they did this with Hurricane Sandy as well.
That's political bullshit.
But it's not like realistically, that's just posturing. Yeah. And so the taxpayers that are on the hook for these damages, and then who is going to pay for this stuff? So the question of who comes down to, is it going to be the state of California? Maybe. Is it going to be federal taxpayers, people like you and me, Nick?
California state taxpayer who's going to be irate that they're paying for Tom Hanks or whoever, some celebrities, somebody's megaplex is subsidized by the poorest people in California. It's going to be untenable. Anyway, I don't know about the markets, but I mean, for sure, I just think it'd be interesting to watch the insurance market, which is already out of spiraling by virtue of the data. And anybody who buys insurance for property or casualty knows this already. And Trump coming in, who's a real estate developer. I mean, Trump ultimately might look at this as the biggest real estate development opportunity of his life. He's the president of the United States. It's the entire west side of LA. He's going to build Trump land over the next 30 years.
The insurance company's performance kind of speaks for itself here, even though it's a little bit, blow-offy here, like many other things. But it's a day of fairly good breadth overall, right? We look at the sector performance. We cover 25 here, or at least track 25 here. Only one is down, and it's consumer staples. Not exactly a group that you look to for leadership during bull markets. So I don't know if that's necessarily a bad thing.
Yeah, but on the other, like your point is, it's the best time ever to be in the insurance business because you're about to get too big to fail. Plus, you're about to get higher rates.
Oh,
which is why you had a bid in the insurance companies today. Insurance
companies, they do great with higher rates, so not a problem at all, right?
And they love lower claim values.
We were talking about this, Dylan, yesterday, how we're starting to see discretionaries perk back up. I noticed that. Did I get filled here today? I didn't get filled today. I was trying to buy some calls here at XOY. Not getting filled, which bothers me. So we'll find another way to crack this egg.
And I's number one plan for the new year was short XLY.
I know. That's why I was looking at long. Yeah. Well,
we were.
You guys were right. And then it goes into this falling wedge situation and it hits that uptrend from the August and October lows. And then the wedge is now breaking out today. So I go, okay, well, this looks like something to buy. So I tried to buy some. I couldn't buy the calls that I wanted to buy. It's pretty, it's not exactly a cheap stock. So it's not going to go in size and buy the equivalent in shares. So we'll take another crack at it tomorrow. But XLY as consumer discretionary up 2.54% today. It's at the top of the heap. The only things that outperformed it are the banks. KBE up 2.61 and XLF 2.55%. Home construction had a nice turnaround. ITB up by 2.54% as well. And, somewhat notably here, yes, it was moving up today in part because yields come back in and a drop in mortgage rates certainly helps. But it also was moving up because of the wildfires. Home builders are going to be in there and someone's going to have to rebuild the area. It may take a few years. Otherwise, I'm looking
30
at
years.
Well, the California, we'll see what the California Coastal Commission has to say about this,
years.
Which is so interesting because I was just reading a report from the New York Times yesterday about the satellite imagery around these fires. And they've basically been able to figure out, like, maybe it was a campfire that was set around New Year's Day that wasn't fully put out. Yada, yada, yada. But what makes this area really fascinating is that several years ago, the Los Angeles Department of Water was given a contract to take out and clear some of the brush. And while it's in the midst of clearing some of the brush, a hiker comes along and sees that they're clearing out brush in an area where there's this endangered flower. And so what happens, he sends an email to the this utilities company and says, like, hey, you guys should stop doing this. This is endangered. And the next week when he's out on his hike, he sees that they're still clearing the brush. So he files a report with the Coastal Commission in California. The project gets shut down. The company is then forced to pay $2 million in fines and shut down the brush clearing project. Incidentally enough, all those flowers are dead now because they were just burned to a crisp. All of the wildlife in that area is now dead. And Dylan, I'm thinking of that Meta project where they wanted to build a nuclear reactor to help power one of their data centers. An environmentalist group got it shut down because of some endangered butterfly that lives in the area.
The Marines out there at the Marine base near Joshua Tree, they have to stand down when there's the pissing turtle. You can't make the turtle pee because if it pees, then it dies because it dehydrates. You can't. So like, give all of our warfighting Marines in their most aggressive condition at 19 years old or 18 years old, but then they have to stand down when the turtle is sighted because you can't scare the turtle.
I don't believe you, but
that's why would I make that up?
but that sounds too ridiculous to be made up.
Yeah, I'm telling you, you don't. They're like full war games in the desert, and then they're like timeout, turtle. It's like a Monty Python.
It's like, do we want to win the war or win the battle? Like, which one do we care about? And like climate change, if you really think it's an existential crisis, you may have to chop down some areas to clear the brush so that we don't have wildfires that destroy human population centers.
They use herds of goats.
Yeah, release the goats. Release
in Laguna Beach, there was a feature of town was the goat herder was always rocking the goats. And that was fire prevention. I don't know. I mean, listen, it's easy to sit around and talk about what these people should have done or whatever. It's the point is,
of course,
property and casualties getting repriced. And for Los Angeles, it's like a permanent issue. But it's a good time to own a bank, apparently, between the Trump dereg vibes and the risk markup vibes.
The banks look good. The insurance companies look
catastrophic risk markup vibes.
Semiconductors are maybe trying to break out again. We saw this at the start of the year where they made an attempt to break the downtrend from the July and December highs. Today, they're poking back above that trend line again. Nick, NVIDIA's been the general in this market. I know that tariff fears are playing through here, so I suppose I should take your position, Tom's position, Dylan's position more seriously. I don't know. I want to round back to what you guys were saying at the start of the show. Am I underpricing what Trump is going to do next week? I feel like we're talking about how this is going to be a new administration with new rules and new regulations and this, that, the other thing. But do we really think it's all coming next week so soon? I feel like the odds of that maybe, let's slow our roll. Why am I wrong, Nick?
Maybe it's not all coming next week, but I think we're going to have the visibility. I think it's going to be a lot of like press conferences and talking and words. And I think even the tariff stuff is more posturing than it is real. I think he just tries to shake things up. And the Greenland thing and the Panama Canal, it's all just to kind of shake things up. And I think that is the volatility. Like, I think it's the same as every other year where, politicians in general just drag their feet for ever and ever and ever. And I think Trump specifically does a lot of talking, which is, will bring about some volatility in both directions. I mean, you remember the days in the pandemic when you'd have after the market closed press conference and the futures would move 3 or 5% up or down on whatever word he said, and they'd be back to flat in overnight session. You wake up and it's like nothing happened. I think that's what's coming back to the market at least in the short term. I think that's kind of what the potential is.
Mm-hmm. Mm-hmm. I agree with that. I mean, I think Trump's best case scenario is a daily press conference with 100 million viewers.
Those were good.
Yeah,
every day at 4:30.
4:30 in the morning on Twitter.
Thing.
Right.
He would be live at 4:30 with 100 million. A giant audience. That's all he cares about.
Yeah, he's an entertainer at heart, that's for sure. And, that's something that he likes the attention. Guys, this just crossed my my feed here. Hindenburg Research Group, the notable short sellers, are shutting down. Wow. Dylan, you that's kind of a big deal. Dylan, we've been jocular in the past when big bears, get taken out to the woodshed when they throw in the towel on, they're like, this is going to be a 20%
Maybe
down
this
market.
is the top.
That feels like a big sentiment signal out there. Hindenburg Research shutting down effective immediately after their last short call or Ponzi scheme identification is filed with regulators, and that day is today.
Well, they had Carvana. Wasn't Carvana one of theirs recently? That I know they had MicroStrategy as well was in that mix.
Let's see what ChatGPT says. I'm sure they have an answer. What are Hindenburg?
I think Carvana was the most recent one, and they wrote. I think when the report came out, it was in the 250-ish, and it dropped all the way down to 180. I don't know if it was them or Andrew Left or one of the other short sellers. I just remember that being a headline.
So the most notable, according to ChatGPT, Nikola Motors. Hindenburg's research exposed alleged fraud, including the infamous rolling truck stunt, leading to a significant drop in Nikola's stock price. Adani Group, which is the Indian company, raising serious concerns about the company's financial practices. Clover Health.
That was Chamath.
Of course. Of course it was. I knew that name from somewhere, Nicholas. Renovero, I don't recall this one, the biotech company last year, and then Temenos, a Swiss-listed fintech company. I remember Nikola and Adani, and I remember Clover. I appreciate you playing into that bit. But yeah, this is like a sentiment indicator. When a famous short seller decides it's time to throw in the towel, you're probably at a short-term exhaustion point. And that worked out really well in July 2023. Who is it? Mike Wilson, the CIO of Morgan Stanley at the time, someone who turned bearish in October of 2022. Then
wrote a 70% face ripper to the upside.
And then got bullish in July 2023. Yeah. It was like, hold on a second. This guy's been on the wrong side of the move for the last 9 months, and now he's turning bullish. And then, of course, the market declined. And when did he turn bearish again? In the last week of October 23. And Dylan, we had a lot of fun with those calls. And we're like, hey, I guess it's time to get long again. So I don't know, Dylan, in your experience, do you think, let's have a philosophical discussion here. Okay. Do you think that short sellers, have they provided utility to this market? They were demonized a lot around the global financial crisis.
I mean, for sure they create value. I mean, I think that the question is, it's like asking if short sellers create value is only, I guess, a function of the degree to which prices reflect reality, because there's always some number of companies that are grossly overvalued, mismanaged, and in need of compression and a reality. And it's only in the two-sided market, as my friend Nick would say, where people that are skeptical of your grand story of prosperity and glory, that the truth can be revealed. And so I guess my bigger